All right, everything looking good. We are live. Let's go ahead and get this stream started. If somebody could just chime in the comments, let me know everything's coming through loud and clear. As always, I would greatly appreciate it. But in the meantime, let's go ahead and get rolling. It is Sunday, 8 p.m. Eastern Standard Time. Welcome back to the channel, Crypto Trend Trader, with our Sunday evening market look ahead. What is it? August 21st, 2022. And like always, before we get started, just want to remind you, it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research, trade responsibly. And let's go ahead and take a look. What's up, Geo Luke? Good to see you. Appreciate you letting me know loud and clear. All right, excellent. So not a ton of action over the weekend. Obviously, traditional markets were closed. We saw a little bit of volatility in crypto, a couple percent here and there. Nothing really to write home about. Essentially had a very strong move down on Bitcoin to close out the week. Well, really just crypto in general. And now we're just kind of picking back up where we left off. If we pull up our futures chart right here, we'll basically see that, after all the weekend price action, when it was all said and done, we did what we typically do and just return to that level that we closed at. And then we'll just, see where we go from here. Now, nothing has really changed on the big scope of things. Obviously, we were expecting that move downwards. Obviously, we sold the top. Did take a small scalp position over the weekend on Bitcoin and Ethereum. We're discussing that in the group and the rationale and everything. I'm going to touch on that a little bit today as well. And you know what? We'll go ahead and mix it up today. We're going to go ahead and start with crypto. I didn't pull up any shit coins or anything. Didn't have any requests for them. So it's just going to be our basics today. But we are going to go ahead and do a little bit of a deep dive into Ethereum. It's been a while since we broke down the Ethereum chart, price action, and key levels. So we're going to go ahead and do that today. One of the group members and I were discussing it, and I think that would be a nice place to take a look. So we did a nice deep dive in Bitcoin in a couple of the most recent streams. So it'd be nice to see what's going on with Ethereum as well. And then we can kind of figure from there, essentially, that, just like the stock market, and we talk about the sectors of the stock market, you have, some strong stocks, some weak stocks, and then some kind of in the middle. And, obviously with crypto, Ethereum has been the strongest, one of the strongest in this recent run up. And then there have been a bunch of cryptos that essentially did nothing or underperformed. And then Bitcoin is sort of like in the middle there. So let's take a look at what's going on with our futures chart. Not much has changed here on futures, obviously, still in that downtrend. Now, the real question is, we basically have a leg down here and then a, semi-bullish consolidation, sort of just floating to the upside up to resistance. And then again, from there, we have a breakdown as well. And then again, we're just kind of floating up towards that resistance. We don't know when it's going to top out. There is definitely some potential that we have already topped out and are rolling over. We won't know that until we get a couple more confirmations. But we are losing some key levels. And then also, obviously, I'm going to go ahead and flip off of the daily. Now, here on the daily, it's worth noting that we're going to see different signatures because of weekend price action. But we do have the sell by sell signal. They're not priced out perfectly by any means. But that was leading up right to that big dump. So essentially what happened was we actually got the bearish divergence signal on the futures chart leading up to this as we hit the 821 daily support. And then obviously we broke down from then, lost the 8 and 21. So for temporary, obviously 200 exponential and simple are both still very bearish. We're still way underneath them. And obviously they're both negatively sloped. So we're very much still in a daily bear market, which is our overall guide for like a useful time frame. We can look at weekly, we can look at monthly, but we know that the daily is going to give us the best overall picture, because when you look at something like Bitcoin that has only a decade worth of price action and has essentially just trended up from zero to the all-time high, it's not ever going to be in a monthly bear market or even a weekly bear market. It's going to take a long time to confirm into those levels. So by the time we're in a weekly bear market, or if we ever enter into a monthly bear market, it's useless because we're not going to be able to trade that move because the time frame is so long, it's so lagging that while it's good to know the overall trend on longer time frames, it's not really useful for any kind of like trading position. As where something like the daily when we really zoom out on the daily, we can see that when we get these transitions, when we get these flips between, essentially a bear market and a bull market, we know essentially the bear market now in futures is not as clear, but the bear market on futures was from essentially, the end of 2017, beginning of 2018, all the way until, we confirm back into a bull market in like May of 2019. And then from then we have a little like kind of fake out right here. Actually, I mean, it's not really a fake out. It basically gets us out before the quote unquote black swan event capitulation, the one that there was no way anyone could ever see it coming. Somehow magically our trading strategy gets us out and then back in. I guess just luck. But regardless, from there, we enter back into a bull market again in June of 2020. And then we stay in that bull market until essentially, we peak out here in January of 2022. So you got about a year and a half trend here. So, if we're taking positions on a daily time frame and we only have to enter the position once and then exit it once again a year and a half later, I would say that's more than sufficient time frame for us to be trading on. Now, it's good to look at weekly time frames and important levels or monthly, etc. But the truth is, the daily is really the main gauge for everything that we're going to use, for everything from, not so much scalp positions, because I look at those as like super short term, but more like swing trades and like actual positions or investments. So it's very important that you realize, you're going to get people that's going to pull up 3 days and 6 days and 13 days or, some just crazy numbers, and they're going to look at stuff. The truth is, if you look at enough time frames, you're going to see what you want to see. Okay. So anybody that's using some obscure like day period, I mean, 3 day, it's like, okay, I kind of get it. But then when you start getting people and they're like, oh, when we look at the 20-day chart or like some just crazy made up thing, like what use is that? Or when somebody pulls up a 3 month and they say, well, look at the 3 month, the 3 month is still bullish. And it's like, well, what use is that? Or somebody pulls up the 1 year chart. Well, you can pull up the 1 year chart on Bitcoin. So there's 10 total candles. I mean, a little more than 10 at this point in time, but I mean, how much use is that? Are you going to be able to trade off of that? Not really. So what is the point? I mean, it's fun. It's cool to look at. It's going to give you a gauge of like what's going on a long enough time frame. But if you don't have to be a genius to look at Bitcoin and say, oh, look, when it came out, it was worth 0 and now it's worth 20,000. And at one point in time, it got to 70,000. So, on a yearly chart, is that a bullish asset or a bearish asset? I mean, obviously it's bullish. Obviously. So it's all about, the longer the time frame, the better, but to an extent that it's still useful. That's very, very important, is that it's still useful. So here on the daily, this is our gauge of basically everything. And then we can go to shorter and longer time frames from there and see what's going on. So what I want to do here is just take a look at the weekly on the future chart. Hang on one second. Okay, much better. Sorry about that. So if we look at the Bitcoin weekly chart for our futures market, what do we see here? And is this giving us useful information? So we broke down below the 200 exponential on simple, and then we back tested it. And now look, we spent multiple weeks trying to break through that. We finally got above it, and then we immediately get this massive bearish engulfing candle. So we basically have one single weekly candle that bearishly engulfed the last like 4 weeks worth of price action. So any thought that there was even a possibility that the bulls were still in control has basically been invalidated, because we couldn't hold above the 200 exponential on simple. The 200 exponential is now red. It's bearish, obviously. Slope is down. The 200 simple is essentially flat, so it's just a matter of time before it rolls over as well. And now we have lost the 8 again. We obviously never even got close to reclaiming the 21. So everything is still pointing to the downside, even on a weekly. And as a matter of fact, for the first time in existence, like we're getting ready to confirm into a weekly bear market. We'll see that again on the regular Bitcoin chart, but be careful here, because people are going to start talking about all these bullish signals and all these buy signals and things being oversold and, minor capitulation and all this stuff. Just be real careful, because again, we have, what amounts to like a 12-year cycle for Bitcoin at this point in time. And if we do decide to do something different, we're going to see all of these big signals and all these things flash and all these bullish indicators, and then we're going to actually see them fail. And that's likely what's happening right now. So it's worth keeping in mind. Now, we do have a bunch of green histograms in a row, hard buy. We've left the bearish control zone. The important thing to note, though, is that the last time we did that, we were still bullish right here, and we got a nice follow through to a new all-time high. We were still technically bullish right here because we were still on top of the 200 exponential and simple, and we couldn't even get back up to 821 and got rejected. So now that we're, essentially confirming into a bear market, this signal is much, much less reliable because we're not even above the 200 exponential anymore. So we have to be very careful that, we don't buy into the Kool-Aid that everyone is selling. Obviously, we're not going to. I'm not going to, but, a lot of other people will, unfortunately. And then we look at the monthly on the futures chart. Obviously, still very, very bearish. The 8 and 21 have crossed the downside. We're not going to have any longer time frames populated, 200s or anything. We're inside the bearish control zone, which means the bears are fully in control. All red histograms from when we topped out, and the 8 and 21 are across the downside. We got a bounce, half of the red candle, and then we basically are selling off now, and we have given back half of the green candle. So if you weren't, this is obviously bullish, a big red candle like that. And then this is what got everybody extremely bullish after that, which was a 50% retracement of that single candle, of that monthly candle. So we went down a ton, and then we went back up about half in the next month. And now we're already engulfing the half of that. So if everybody got bullish here when we went back up half of the sell-off, everybody should be very bearish here now that we're selling off half of the bull one. But that's not what happens because of natural bias. So, that's one beautiful thing, on this channel, and why it's so important for me to basically like disrespect assets when the charts look bad, because then I don't get caught up in the bias. Okay? Because if I'm always like, oh, I love Bitcoin, it's the future, everything's gonna be great, I start to build a bias. And I'm like, oh yeah, well, so the chart's a little bit bearish, whatever. Bitcoin's still the future, and I have that in my head. So I start having like confirmation bias when I see something good. So the way that I personally combat that is by basically just disrespecting assets when the charts look like shit. Now, you don't have to do that. You can do it however you want. But the important thing is figure out what works for you and then do that. That way you don't get caught up in that confirmation bias. So for me, I like to be mean to assets when the charts look like crap, and then I like to praise them when the charts look good. So like, for instance, if we go back into a bull market, you'll hear me start talking about, how great cryptos are and stocks and, shit coins or whatever and blah, 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 blah. But when we're in bear market, I'm not going to sit here and lie, at what I'm seeing. So that's the most important thing. And that's why I do it. And sometimes people mistake what I'm doing as like, oh, this guy just doesn't like crypto, or, oh, he just doesn't like foreign stocks, or, oh, he's just, obsessed with the dollar. No, it's the opposite. I hate the dollar. I think it's absolutely terrible. I think all fiat currencies are garbage. I think some cryptos are going to be the future. I think the stock market is designed to go up, and it essentially reflects the quote unquote like strength of the economy in whatever region you're trading on. But when the charts look bad, I'm mean to the assets, or I talk bad about them, so I don't get caught up in that confirmation bias. You don't have to do that. You can do whatever works for you, but that works for me, and it helps me to keep my mind right. So, just a little note there. So let's take a look at our daily Bitcoin chart. We're going to keep it quick because we're going to do a deep dive on Ethereum today. And we have quite a few requests, and then a couple things that I pulled up as well. Some nice charts. So our Bitcoin daily obviously looks much different. We see a bunch of sell, buy, all this stuff. All that is just chop. All this is chop. And one of the beautiful things about the Jewel Thief, if you are in the trade group, is we actually have the ability to change that like however we want. So there's actually a setting. I don't have it selected right now on my personal chart, but when we pull this up here, we can look at obviously all of the different settings that we have available to us. There's tons and tons of options that you can do, but essentially we have what's called the strict criteria, buys and sells, and then like the crosses, all that good stuff. And essentially the idea is that with the strict criteria crosses, we won't see all of these extra little bits right here. So here, once we're inside of, say, the bearish control zone here, when it's all green like that, or the bullish control zone when it's all red right here, those are going to give us much, much more reliable signals, especially when they are contrary to the trend. So if we're in a bull trend, we don't want to just sell because the bulls are in control. We want to buy when the bears are in control, because the trend is up. So the bears are not going to stay in control for long. When the bulls are in control, they could stay in control for literally like months and months and months. So for instance, if we were like, you know, in this uptrend right here and we see like, you know, oh, look, we're in the bullish control zone, you know, we're getting pretty toppy right here, maybe we should sell. But no, because we're in an uptrend, we're actually like disrespecting the bullish control zone. We just ignore that and we say, yeah, of course we're bullish, we're in an uptrend, go away. So we don't sell when we leave the bullish control zone. You know, it's the opposite. We actually buy when we enter into the bearish control zone. So once we're on top of the 200 exponential and simple, this buy signal right here is one of the most strong signals you could possibly get, because the bears have taken control for a short period of time before the massive bull trend resumes. And then the same way when we start to, you know, have the trend flip right here, this is one of the stronger signals, you know, again, for a potential buy, because we're still bullish right here, but it's starting to look sketchy. So when the 200 simple is above the 200 exponential, we start saying, okay, hang on, you know, things are, you know, we're losing momentum. We know likely we still put in a new all-time high. I say that all the time. When the 200 simple cross above the 200 exponential, there's still a very high probability, somewhere close to like 66 or 75%, that we still put in a new all-time high, but it means likely the trend is rolling over. Now here it actually strengthens enough, the 200 exponential gets back on top, and then again we see the same thing happen, and then this time something happens that didn't happen before. We actually get the 200 exponential and simple both red at the same time, and on the back test it fails and gets rejected. So here we back test and we actually find support and then get back on top of it, and then when we back test here it holds support and then we go to new all-time highs. Here the opposite happens. We break down below them, the 200 simples on top, we know we're losing momentum, and when we back test it fails and gets rejected. And again, this is the most powerful signal now, because now we have confirmed into a bear market. So once we confirm into a bear market, the hard sell from the bullish control zone is the most powerful signal. And now the opposite is true. Now whenever the bears are in control, we disrespect this buy signal, because we say, well, the bears are in control now, so F a buy signal, give me a sell signal, that's the good signal. So, you know, the signals are more powerful when they're contrary to the trend, because in a bear trend we would expect the bears to be in charge a lot of the time. So we don't want to be, you know, selling, or I'm sorry, we don't want to be essentially countering the trend. We want to be selling the rips instead of buying the dips. On the way up, we want to buy the dips, which means every time the bears get in control, that's a perfect opportunity to add, because we know the bulls actually are running shit. The bears just have this little blip where they have the ball, and then the bulls are going to come and tackle them, you know, and take back over and go score a touchdown or whatever. And then the opposite is true in the bear market. So while we're in the bear market, the actual times when the bears are in control, when we leave the bearish control zone and get that hard buy signal, it's much less reliable, because likely what's going to happen is we're going to get a pathetic move like this, and then, you know, the bulls are going to get their heads dumped on. And you see here all this move to the upside, and the bulls never even get back in control. So, you know, trading with the trend is very important. And then if we just turn this back on here and, you know, basically just look at the settings, you can essentially adjust these settings accordingly. So say you're looking at an asset and it tends to not get into those really high ranges of like the, you know, 80 plus ranges, you can alter the levels to like, you know, say if you don't want to use like 20 and 80, you can switch the inputs over and you can use, you know, something a little more like casual. So if 80 and 20, you're not getting enough buy signals, you could turn it to 75 and 25, or you could turn it to, you know, 70 and 30, etc., etc. And then again, like I was saying, you can basically alter the various, indicator like crosses by basically having like strict or, you know, regular crosses. So you can turn off all of these little false signals right here, because you never actually made it inside of the bullish control zone, and then you'll only get them when you're in the bearish control zone or in the bullish control zone. So it's an option that's out there for you if you want less of those false signals. Now sometimes you're going to miss a good signal, but you're also, for every one you miss, you're probably going to not see 3 false signals. So, you know, again, fine tune it as much as you want, change it up. I just use what works for me and try to keep it simple. So that being said, we have the daily we broke down. The 821 have crossed back to the downside. You know, we have, at this point in time, we have lost the channel and we're basically just back testing it. I think yeah, okay. I deleted everything and then built this up a little bit. So let's just pay attention to what's going on here. So here we have essentially this ascending channel, and we know that that channel is essentially just the bear flag before the breakdown. We know that this pattern itself, a bear flag, has an over 66% probability of breaking to the downside. And then of course what happens? Well, of course we break to the downside. Now there's a lot of different ways you can draw this, and a less savvy technical analyst will draw it incorrectly. And I'm not talking about you guys. I'm talking about like other like fake TA gurus and whatever out there. So they're going to be drawing all kinds of funny stuff and saying oh, look, we're still on the bottom of the channel, and they're going to move stuff when it's convenient and say, oh yeah, everything's fine because look, the top there, and then, oh, well, it's just, it just needs to be a little bigger right here, and then we'll just use the wicks, and maybe I'll switch exchanges or time frames to make it work, and it's like, oh yeah, we're still inside the channel, because look, hitting the top. But that's not real. You're just, again, confirmation bias. You want to say we're still in the channel, we haven't lost support, but clearly by the price action alone, it's very clear we have lost support because we don't see any other big red candles like this. And overall, this is bullish. Now, it's part of a bearish pattern, sure, but the overall pattern is bullish. We're putting in higher highs and higher lows. So then, is it realistic to say we just get a big red candle like this and everything's fine? Or does it seem more like we broke down from a key level? I mean, obviously, we broke down from a key level. That's why we got a big red candle, because everybody says, uh-oh, we're losing support, etc. So now what do we expect to happen is basically just that back test. And that's what I tried to play over the weekend. Now, it didn't work out particularly well. I mean, I'm still up on my positions, but what was the move over the week? It was like 2% or something like that. So we're above my entry, but I'm not exactly retiring off of the play, etc. So again, counter trend, because obviously the trend is bearish, but basically we were just looking to play the reversion, like back the retest before it rolls over. Now we could get all the way back up here to the bottom of the channel. We could reclaim the channel. We could get rejected now and roll over. We don't know exactly what's going to happen, but I was just looking for a quick little scalp is all. So we have the hard sell, obviously, right before the breakdown. Again, we got a lot of false signals. So, how reliable would you have taken that? The more important thing to look for was the bearish divergence. And obviously we pointed out multiple drives in a row of bearish divergence. And then obviously that played out with a nice move to the downside. So the move could be done now, and we could continue back to the upside and start hitting some of our higher targets, or the move could still be going. Now we know when we break down from that channel, the measure move should have taken us down closer to the bottom of the level, which on the daily, that's our lowest close, is essentially that yellow line. And the measure move essentially takes us back to that yellow line. So we probably got half the measure move. We'll probably get some bullish move back up. And then assuming that fails, which likely it will, because the trend is obviously down, we would expect then to come back down. And each time we take out one of these previous lows, the trend looks weaker and weaker. Taking out this low is a big deal, but still technically from this low, we then have a high. So now we have put in a low. So the next thing we need to look for is, do we put in a higher low or a lower high, or both, or anything? We just need to look for clues from the market. So before we can say, okay, we broke down from this short-term uptrend and now we're in a short-term downtrend, we have to have a high, then a low, then a lower high. So likely, my guess is, based on, a gazillion hours of looking at charts and just watching all assets just basically do the same thing over and over again, my guess is that we'll come up here, we'll put in a back test lower high, and then we'll go down and put in a lower low. But again, now after that point in time, then we'll have a high, then we'll have a low, then we'll have a lower high, then we'll have a lower low. And then, we can grab our whatever we want. We could grab like our channel tool, or we could look for like an ascending wedge or a descending wedge or something like that. And then we could say, okay, now we're trading in like a downtrend. So then we're going to look, do we eventually put in a higher low than this one in yellow? And that's what we're looking for. So we have a theory on what's likely to happen. We have key levels to watch right now. And then, obviously we can readjust from there. But we have basically we have our choose your own adventure. We skipped ahead. We looked at the next like 20 pages. And now, depending on what Bitcoin does, depending on what the markets do, we know, where we want to be. We know which page to flip to in advance. So that's the most important thing, is having an idea of, hey, this could happen, and this is what we're going to do accordingly. So when we got this move to the downside and we ended up taking that quick little position back to the upside over the weekend, if it fails, that's fine. If it plays out, that's even better, obviously. But in the meantime, we are like short-term long. Now, it is important to notice right here, though, that we did break down a bunch of red histograms below the blue slope line, and we lost the zero line. So the blue slope line is still there, but we're below it, which means if nothing happens, that will flip red and confirm bearish. So right now, it's up to the bulls to basically do something, because if nothing happens, the bears are winning and they will continue to win. So that's a very, very important thing. You know, the one thing I like to always identify is obviously like trend. And then from once I've identified the trend, it's very important to me to know then, okay, who's got to do something? Who has to do something or else? So if we're in a situation where the bulls just don't do anything and the bears just don't do anything, the bulls are winning, or vice versa. If neither one does anything, the bears are winning. You know, that's important to pay attention to, because then you know what has to happen for it to flip. So in this case right here, I'm going to turn off the drawing tools, run the weekly Bitcoin Bitstamp chart. In this case right here, okay, we know as long as we were between the 200 exponential and simple, it was neutral, because we're below 1 and we're above 1. So 1 is saying we're still good, 1 is saying we're not. 1 is red, 1 is blue. So again, you know, we're getting mixed signals. So then we can look at our shorter time frame moving averages, the 8 and 21. So we're below the 21, but we're above the 8. So again, we're kind of getting mixed signals. And then all of a sudden our stochastics are saying, hey, hard buy signal, leaving the bearish control zone. And it's like, well, that's not that reliable because it's counter trend, because it's a bear trend. So we would expect the bears to be in control all the time. So again, that brings us back to it's not as reliable because it's, you know, the bears are in control. And then we see a bunch of green histograms and it's like, okay, we're starting to build some momentum. So the real question is then, okay, we're kind of getting mixed signals. You know, one's bullish, one's bearish, you know, it's counter trend, etc. So we have to figure out, okay, so who has to do something and who can just do nothing and win? So in this case, the bulls had to do something. The bulls needed to push the price back above 7,000 or whatever. The bears didn't need to do anything, because the longer we spent at this area, the more likely it was that this slope flattens out, this one keeps accelerating to the downside, and then eventually, you know, it just looks bearish. So this recent move from the bears and engulfing, you know, the previous like multi-weeks of bull candles, that's basically the bears taking complete control. So now breaking down below the 200 simple, now what has to happen? Again, we know the bears don't have to do anything. If we spend enough time down here, the 200 simple is going to flip red too, and we're going to be in a weekly bear market. And, you know, just for the, just for reference, there's no point in time in all of Bitcoin's history, in literally its life, there's no point in time ever, not 1 second, that we were in a weekly bear market. So if we confirm, you know, here obviously we lost to 200 exponential, we found support at 200 simple. Here we lost to 200 exponential and, you know, got back above 200 simple. We never flipped the slope over red. So if and when this slope, and I'll tell you right now, it's very, very close. The 200 simple is almost flat. If and when this flips bearish, this will be the first time in Bitcoin's history on a weekly time frame that it is bearish. And that means Bitcoin is doing something it's never done before. And of course, you guys know that my base case is that Bitcoin has put in 5 waves through its entire life cycle. You know, obviously was 3 massive bull markets based on the 4-year life, you know, 4-year halving cycle of Bitcoin. And that now actually what's about to happen is we are in the process of correcting the 5th wave. And then we're actually going to end up going deeper into a correction where we correct the entire 5 waves, which is the entire Bitcoin life cycle. And again, losing something or doing something that we've never done before reinforces that view. So if I'm right, all we're doing is just taking more steps in that direction right now. So Bitcoin literally right now, if nothing happens, if the bears and the bulls just take the next 6 months off and nothing happens, and we just get 6 candles where nothing happens and it just goes sideways, the 200 simple will be red. And that will be the first time ever. Now, the further we get away from that, the quicker it's going to accelerate to the downside. And when it flips red, that's going to look real nasty. And all of a sudden, bots, algorithms, whales, market makers, you know, savvy investors like myself and you guys listening, we're going to know, oh, okay, Bitcoin just did something for the first time in its life, and it's not good. So now all of a sudden, we're going to say, okay, what other bad stuff is about to happen? And, you know, obviously, you know, Michael Saylor will lose all of his money and all the money he borrowed. You know, all of the hodlers will eventually capitulate and give us their coins for pennies on the dollar. You know, and then one day we'll go back into a bull market theoretically, etc. But by then they will have all quit, you know, and we will have accumulated all through the weekly bear market, you know, and then finally we'll go to 100,000 or 1 million or whatever. Maybe. I mean, I'm still bullish on Bitcoin long term, but we got to be real here. We've got to be real. We have to respect what's happening right now and how nasty this chart is getting and how much it's proving us right. And you know, I bring that up a lot because it's important, because there's not a lot of channels or technical analysts or, you know, TV shows or whatever. There's not a lot of people out there that accurately predict what's going to happen in advance. Most all of them pull things up after they've happened and say, oh, look, this, and this, and that happened. But it's hindsight TA, which isn't useful because you can't make money off hindsight TA. If I tell you the winning lottery ticket numbers the day after they're drawn, can you make any money off that? No, it's useless. But if I tell them to you the day before, could you make any money off of it? Of course. You go out, buy the lottery ticket, and then you act like you didn't have insider information, and then, you hit the lottery and you're like, oh, this is so crazy. I can't believe I won. Oh, what a coincidence. I love these numbers. And you're like, oh, why'd you pick those numbers? And you're like, it's my cat's birthday. And you're like, oh, okay, that makes sense. So it's all about what's actually useful. And that's what's so important is we've been able to lay out this path. Now, there's a couple times along the way where there were small blips that were a little bit different than what we expected. But I mean, we basically have nailed all of this price action. So we'll just assume that what we have done is we have basically taken what the market has been showing us and, all of our experience and technical analysis. And now we're using that to say, okay, the likely thing that's happening right now is someone that's in control is moving this price action, this market accordingly, and we know what they've been doing so far. So now we have a pretty good idea where and when they're taking this price action to. So that's why it's so important. So now if we just switch out to the monthly chart here real quick and take a look, and then we're going to do a little deep dive on Ethereum. Again, we'll see what everybody is talking about. And I brought this up in advance that the previous two times in the bear market, when we got the 821 monthly cross, that was the bottom. And we never put in a new low from there. We went sideways for, 6 or 8 months and, got super boring, whatever. And everybody just gave up and crypto was dead. And, that was what the bear market just does. So I pointed out that there's a possibility that happens right here. And that's why we were actually taking like scalp play back to the upside to potentially take advantage of that. Regardless of whether or not it was going to be true, we said the likelihood of us being like a tradable bounce out of that is very high. Which in Ethereum's case, it was like 70%. In Bitcoin's case, it was almost, 40%. Many of the altcoins had varying moves between, 20 and 100%. So it played out perfectly. But keep in mind, though, that doesn't change our overall look on what's going to happen. It's just us taking advantage of this little itty bitty little green candle right here to just, improve our account size. But the bears are still very much in control. And while we're still saying, okay, there is a possibility this is bottoming and it's going to do the same thing it did in the previous two bear cycles, there's also that possibility. And we see it on that weekly chart we just looked at. There's a very good possibility that we're actually ready to do something we've never done before. So what would that look like on this chart? Well, again, taking out that low. So we're not far off of that. So regardless if you go by the close or if you go by the wick, we're talking about basically 17,800. Or if you go by the close on the monthly, we're talking about 19,980. I mean, so we're literally like, at this point in time, we're like 6-7% off of essentially, again, doing something we have never done before, and not in a good way. Okay. I'm not talking about like my wife told me we're going to like experiment. I get to do some stuff we've never done before. No. I'm not talking about that. I'm talking about the bad kind of experimentation. She might be like, hey, we're going to do some stuff we never done before, but like what's in that paper bag? I mean, no, not the good kind of surprise, okay? And that's what Bitcoin's setting up for right now. So it's very important to, pay attention to what's actually happening here, not just what we want to happen. We have lost the slope line, all red histograms, we're below the zero line, we're in the bearish control zone, we have the cross of the 821. The only thing that could possibly be more bearish on this chart right now, the only thing is if there was a 200 exponential and simple moving average, which there's not, because it would be 200 months just to populate. But if there was, if we were under it, that's the only thing that could be more bearish. But obviously, because Bitcoin has limited history, we don't have that. So, where would it be? I mean, it would probably, it would be like somewhere around, 10,000 or something like that, just roughly guessing. All right, so now that we've laid that out, and again, just kind of touched on what's really going on here, just for perspective, it is very, very important that we keep all of that in mind. All right, so let's take a deep dive on Ethereum next. So what's up, Honkiness? Good to see you. Honkiness in the house. Parag, good to see you as well. Hello, everyone. Enjoying the stream as always. Thank you. Thank you for enjoying the stream, showing up, and always interacting in the comments. All right, so let's take a look. All right, so here is our Ethereum chart. So the first thing we're going to do is, again, I have it on Bitstamp just because it shows quite a bit of history. We're just going to go out here to the monthly. And essentially what we have is, obviously Ethereum 2015, August was our, basically like inception and then low. And then obviously we had one nice little bull market up till, the end of 2017, 2018 bull run. And then obviously we put in our low down here. And then we went to a new high in this bull market. And again, we can see we don't have 200 exponential and simple on the monthly, obviously, but we have the 8 and 21. And we can see that if you just followed that simple strategy, of the 821 crossing right here, you capitalize on massive amount of gains, even on something like the monthly chart. Up to the peak was 2,193%. Up until like the cross to the downside, you could argue, it was 700%. So, obviously you want to use shorter time frames because the difference is if you traded this monthly chart, you look like a damn genius right here, right? When you're up 2,000%, you look like a genius. You just 20x'd. But if you only trade the monthly chart and then you decide you're going to exit out back here, you're only up 800%. So what happened to the other like 1,200%? Well, you gave that back because you're trading the monthly. So obviously you're not going to do that. Hard sell, left the bullish control zone, all red histograms, red slope line. So we know Ethereum doesn't look good. 821 have crossed the downside. Doesn't look good. I don't even know what's on this chart anymore. Okay, I could deal with this. That's not bad. All right, so we have our first fib down here in yellow. Actually, let's make that one blue. So we have our fib down here in blue from the low, which is around like what, $80 or something like that, $81, up to our high right here, which was like 5K basically. And then let's go to a little bit shorter of a time frame. So now we're going to look at our weekly time frame. And essentially, what did we do? We basically just moved up in this channel the whole time. We had clear support at the bottom of the range a bunch of times along the way. We had a little bit of resistance here at the top. We kind of had like a blow off top here, and then it failed, come down. We're about to cross and potentially break down, and then price action swooped back up, picked up, and went to a new high, at which point in time we then topped out. So I don't have it on here, and I'm going to delete it in a second, but the way we were able to identify this as the top in advance and essentially pick out where Ethereum was going to go up to, we just used fib extensions multiple different ways. So we used one from the peak in 2018 to the trough in December 2018, and then essentially that just projected us out to like a 1.382 fib. You'll see here in red, right in between the 1.382 and the 1.5. And then again, if we just did the same thing from this little peak right here, the high right there, down to the low right here, and then just project that out as well, that takes us up to roughly, I don't think we really had a substantial level on this one. I thought we got a little closer to 1.236, but I guess not. So anyway, once that peaked out right here, essentially, what would we look for is basically, okay, where's our short-term top at? So basically what we have, the blue fibs from the bottom to the top right here. And then once we hit the top, what we're paying attention to is at some point in time, do we come down and we touch the 236 in blue? That's what we're looking for, because once we hit that 236, we can confirm, okay, we have likely hit, the 236, which means likely the top is at least in for now. So usually what will happen is we'll then go to the 382 sometime after, whether we put in a lower high first or whatever, we don't necessarily know. But eventually that's what we're looking for, is a move down to the 382. So in this case, maybe I should delete all this junk. I should have just cleared out the chart. It would have been simpler, but that's fine. All right, so then we come down to the 382 and we bounce the 382 almost perfectly. And then from the 382, that was the trade setup that we had taken advantage of, which was basically just the back test from the 382 to the 236. That was like 76%. You guys know I cut and run a little bit early, diversified into some of the other crypto assets. did it work out? Nah, not really. It was basically this. I should have just been lazy, left my money alone, and been done with it. But you don't know. Sometimes you're going to have a bunch of shit coins just roar to the upside. Other times we're going to get like we did, and, they just underperform. Regardless, though, it is what it is. We did have a hard buy signal coming out of the range, but look how late it came in the cycle. And then now we have a bearish engulfing candle on the weekly. So that's not good. It looks pretty toppy right here at the 21, back testing the 8, and now we close below the 8. So it's possible we still get picked up right here. We're on top of the 200 exponential again, but it doesn't look great right now. Essentially we lost all of our moving averages, got all the way back up here and tried to reclaim them, and then at the last one, couldn't get above it. And then we come down to 200 exponential, and then potentially, we have to look at, okay, if we go back to the downside, we're likely coming down to like that 1250 to 1275 level, back to the 200 simple. Now, if we do that, we don't just immediately get bearish though, because we have a low here, and then we have a high, and then we would have a lower low, or a higher low potentially, and then we could continue moving to the upside. That would be the bull case. And then it's like, maybe we go back to 2500. We don't know. But now that we know we have basically topped out our big fib, the next thing we want to do, obviously, once we start looking like we're potentially bottoming, which obviously hitting the 382 looks pretty good. We're hitting a real technical level and finding at least some temporary support there. So the next one we're going to draw in real time, obviously, this would have already been on our chart. We will do, let's do the yellow one. So we'll draw our net yellow fib next. And then essentially once we get to 236, we say, okay, we can confirm now we hit the 236. So likely the swing is in. The pivot point is confirmed, and then we look to go to the 382, which of course is the next thing we did. 2 candles, and then we're back at the 382, and then it looked actually like we were going to go to the 0.5 because we consolidated there for a little bit. We burst the upside, and we almost got back to the 0.5. So now we have went down substantially. We have retraced 50% of that move down, and now it looks like we're rolling back over. So the thing to pay attention to now is when we come back down here, are we going to put in a higher low, or are we going to put in a lower low? If we put in a higher low, we can at least say we have a short-term uptrend in our downtrend, in our long-term uptrend. So that's what we're paying attention to right now. Now, the other swing that's important in this case also is not only the all-time high pivot, but the previous clear swing. So very clearly here we have a leg down, then we have, a bullish retracement of that bearish leg, then we have another leg down, then this is a bullish retracement of that bear leg. So again, we're going to just look at this swing right here as well. And then we're going to take that to the bottom. So when we take that out to the bottom, and we will make this one, let's make this one orange. So now again, let's look for some confluence levels and see, what's going on here. So obviously when we hit the bottom here, we come up here, we get to the 0.5 in orange. We almost make it to the 618 in orange, which lines up like perfectly with that 0.5. So again, some clear levels that are important right here. So once we get back up to that level, we see the 0.5 and the 618 at the same level. We know that there's a lot of confluence there, and that a lot of people are going to be looking from the all-time high to the recent swing low. And a lot of people, or bots, or algos, or market makers, or whales, or whatever, are going to be looking at from this recent swing high to the low right here. So if we use both of them, we have a huge advantage. Because if half the people look at this, and half the people look at this, we're looking at both. So we basically know what everybody's looking at. So that's the way to do it. It's the best way to do it, in my opinion. And then obviously we have also, this little peak right here, this little peak right here, and then the potential to get up as high as this little peak right here, with basically just still inside of a descending broadening wedge. So that being said, that's our breakdown on Ethereum. Now, if we go to like a micro or shorter time frame, I'll leave all this junk on here so we can kind of follow it over time. As we get to like our shorter time frames here, now we can start paying attention to, okay, so now what's happening on this leg right here? So let's figure out, has this leg finished? Is this leg potentially topping out? And again, the beauty of what I do, what we do, what I teach, the beauty of it is that we do the same thing over and over again on different time frames, on different moves, on everything. And by doing that, it gives us a huge advantage because we're consistent. So when something goes right, we're like, oh, awesome. We'll just keep doing that because it works. And when something goes wrong, we say, okay, that's not working well. And consistently, it's not working well. So let's just stop doing that. Or we'll maybe still look at it, but we're not going to give it much respect. Okay. So here from our low to our, wait, did I delete the wrong one? Whoops, sorry. I think I clicked the wrong one there. So from our low right here to our high right here now, we obviously have a fib just from the bottom to the top of our recent move. And then from that recent move, what are we looking for? Well, we're looking for hitting the 236, because once we hit the 236, we say, okay, the fib is now validated. We can say that that was at least some form of temporary pivot. Could we go higher from here? Sure. Could we go lower from here? Sure. But once we hit the 236, likely our next target is the 382 or the 0.5 or the 618. Obviously, you know, step down, slinky theory. So what we're paying attention to now is, okay, we lost the 236. So when we come back up here for a back test, which we did, we back tested it with 2 candles in a row of the 236, you know, almost perfectly. On that back test, maybe we go a little higher and we hit the 821 cross, and then we go lower. Maybe we just go higher and straight to the moon, or, you know, maybe we go lower and never that high again. We don't know which one's going to happen, but we have identified very clear pivots in the market, very clear areas of, you know, support and resistance that potentially we could flip. And as we push through a support or a resistance, you know, the likelihood that we're going to continue in that direction is higher and higher, as where if we get rejected at one, the likelihood of that pivot holding in the future gets stronger and stronger. So 2 things could happen right now, basically, with Ethereum. We could, you know, we're already starting to retrace this. We've already come down to the 236. We know historically, once you hit the 236, the likelihood that you end up going to at least the 382 is like over 75%. So once we go to, you know, assuming this is the legitimate fib, which it is for now, you know, and how do we say that's a legitimate fib? You know, how do we confirm that? Well, the more confluence, the better. So if we have a low right here and the whole time the daily is in a bear market based on the 821 and below the 200 exponential and simple, when we flip the 821 bullish right here and then we get a move to the upside, that's clearly, you know, a counter trend move, but it's clearly a, you know, a nice like impulse forming. So we have obviously an impulse to the downside, and then here we have an impulse to the upside. And we can see it right here, impulse to the downside, a little impulse to the upside, impulse to the downside, a little fake cross. And then here we have a clear impulse to the upside, a clear impulse to the downside, a clear impulse to the upside. So when does the impulse likely end? Well, it likely ends when the 821 cross back to downside, and now it looks like we're beginning an impulse to the downside. So is that impulse going to be a big one right here that takes us to a new low? Or is it going to be just an itty bitty one that actually we put in a higher low and then we have another impulse to the upside? We don't know for sure, but obviously because we're in a bear trend, the likelihood is that actually we're probably going to get an impulse to the downside. And then of course we see a sell coming out of the bullish control zone. We see all red histograms. The slope is still blue, but now we're below the 0 line. We're below the slope line. So likely what's happening is here, a bullish retest followed by rejection and then a push down. So maybe we'll look to accumulate at like 1466. Maybe we'll look to accumulate at the 0.5 at 1333, possibly down here at 1204. You know, we obviously have, this was our key resistance breakout, you know, of the little sideways channel. So that seems like a strong support. So when we get down here to this level, and then obviously we have the heart line here in orange. So if we get back down to this level right here, that will then be, you know, obviously this was our low. I deleted our box from before. I'm going to put it back in because it is important. So this was our, you know, bullish accumulation target and box right here. So this is our first low. And then this is our second potential low. And if we put in a low, then a high, then a higher low, then we come up here and put in a higher high, you know, then we can start saying, okay, we have actually like a decent little uptrend starting to form here. You know, decent little impulse followed by correction, followed by another impulse. If we don't, we say, okay, it looks like we're just going to resume the trend to the downside. And here you see we did something similar. We put in a high, then we put in a higher low, and then we got another impulse to a new high, back to resistance, at which we back tested and then rolled over. So is it possible we do the exact same thing? Sure, I definitely think there's a high likelihood that we still have, you know, a little bit of legs on this rally. Now, we're still bearish, obviously, macro, because of what's going on here. But again, we have a low, then we have a high. So there's a high likelihood if we come down here and find some support, we then could come back up and put in a new high. And then eventually probably get rejected and go lower. If we get back on top of them, it'll look more like the S&P and some of the stronger indices of the stock market. And then, you know, maybe we break out, go to new all-time highs. And we have clear definable areas at when we will say, okay, looks like our thesis was wrong. The correction is done. We're not going to get another leg to the downside. And actually, we're probably headed to new all-time highs, which is totally cool. I mean, I'm all for that. Like, I'm not lazy by any means, but look, if somebody told you, hey, you want to earn some money, and you're like, yeah, I love earning money. And they're like, okay, cool. Do you want to like work really, really hard to earn it? Or do you just want to like kind of work and just earn it? And you're like, well, do I get more money if I work really hard? And I'm like, oh, no, it's the same money. And you're like, so you're going to tell me you'll give me the same amount of money if I work really hard as if I just don't work hard? I'm like, yep, that's it. The job has nothing to do with how hard you work. You get the same amount of money. You can either work really hard and get it, and, or you can just barely do anything and get it. Like, which one are you going to pick? Are you going to pick the easy money or the hard money? I mean, you can pick the easy money, obviously. So bull markets are easy money. It's that fucking easy money. Okay, bear market's hard money. You got to work so much harder for it. So we want the bull market, okay? But we don't get to trade the markets we want. We trade the markets we have. So that's very, very important. So while it might sound like I'm mean, or, I'm a bear all the time, or, I just want everything to go down because I missed my opportunity. No, I just want the easy money. So that's what I'm seeing. This is what I'm still expecting to take place. On Ethereum, we basically have our leg 1 down, our leg 2 up, our leg 3 down, and then the potential for our leg 4 up. Now, is it done? Maybe. Because it goes slightly higher? Maybe. But there's not a lot of leeway for ETH. Because the truth is, if Ethereum goes higher than like 3,000, we take out the bottom of the 1, and we know that when we have 5 legs up or down with our, Elliott wave structure, that the 4 cannot retrace inside of the 1 by more than a wick on a long time frame on highly leveraged markets. So if we get above this level right here, we're also getting above key resistance from the descending top of the broadening wedge. We're also getting above the 200 exponential and simple, and then obviously getting back above the 236 likely leads us back to the upside. So again, that's a clear level where we say, okay, you know what? We were wrong. Looks like the market's flipping back bullish. Completely okay with that. Completely okay with that. But we have a clear definable level, and that's the most important thing. We have rules in place and ahead of time. And then the same thing, let's say we're right. Let's say this is rolling over already, or even it goes up here and then it rolls over. But let's just say it's rolling over, it's done. Okay, that was the top of the 4, and now it will only go down, and it will go to new lows. What's our next target going to be? Well, we know the initial push down was to get us to the 236. We broke through the 236, hit the 382. Then we pushed back up and back tested the 236's resistance. It is now, in fact, no longer support. It is resistance. That's our SR flip. And then likely we take a leg down. Where does that leg take us to? Well, back to the 382, no doubt. And then probably to a new low, which would in this case be our 0.5, which is our macro target, $625. Now, is it possible we go lower? Sure, we know we have the macro 618 down here. Maybe we go down to $388. Now, am I just going to expect we go to 388 and just say, well, I'm not going to buy at 618 if we're going to 388? Duh. No, we're going to trade the market we have because we don't know that's going to happen. So when it gets down here, we'll look for exhaustion. We'll look for signs of, bullish divergence off of key levels. We'll look for confluence. Obviously we have the potential for this fib extension from the bottom to the top right here will give us like roughly the 1.382 exactly at the 0.5 or the 1.618 slightly lower. So maybe we're going to look for like, this as our buy zone, somewhere in between that 0.5 in blue on the macro fib and the 1.618 Fibonacci extension of the previous wave. So let's just see, well, how could we see, what maybe we could look for? Well, let's do the exact same thing on this other one right here. And let's see if we see any kind of like potential confluence. So this is just our same fib that we have from that last leg. We're just taking it from the bottom of the 1 to the top of the 2. And then we'll look for where our extension takes us to. So look at this. I mean, if this isn't, let me change the color of this for a second. Let's make this one white. Hopefully you guys can see that. I mean, if this isn't textbook, beautiful, buy, which obviously, we took advantage of, I mean, look, there's a reason these markets are our bitch, okay? It's not because, rocket science, okay? It's because we're doing the exact same thing that the people with the, the market makers, the whales, we're doing the same thing they're doing, okay? And if they're not doing it, their bots and their algos are doing it. And so we just know what the algos and bots are programmed to do, and then we just do that. So we're basically just doing what the computers are doing. It's not like this is some crazy thing and it's like, oh, when we line up the astrology and, we pull our cards and I talked to Miss Cleo on the phone for another hour. I shook my magic 8-ball. I ran around the house 3 times. I put on my copper bracelets and then I lit some incense. No, we're literally just doing what programs are programmed to do. And who programmed them to do that? Well, somebody that's doing the same thing we're doing. So in essence, all we're doing is just, copying what everybody else is doing, but we're copying it in advance because we know essentially like the I don't know what you want to call it. We know the recipe to bake the cake. So it's not that hard for us to be like, oh, okay, we're baking a cake. And you're like, yeah, man, wait till you find out what's going to be in it. And I'm like, oh, okay, it's so crazy. I wonder what the ingredients are for a cake. And I'm like, let me just go to the store and buy some cake mix, and some eggs. And, we got some water and a pan, a little bit of Crisco. And, we can get ready to bake this fucking cake. We don't have to wait. And then it's like, hey, guess what you need to bake a cake? You're going to need some cake mix. And I'm like, oh my God, that's crazy. And you're like, you know what else we need? A pan. And I'm like, what? A pan to put the cake mix in? That's insane. And you're like, I know. And you're going to have to preheat your oven. And you're like, oh my gosh, good thing I have an oven. I mean, that's all we're doing. We're just getting ready for what's likely to happen. Now, is it possible you mix it up and you say, oh, I know I said we we're going to bake a cake, but actually we're making pies. And I'm like, oh, that's nuts. I mean, that's all it is. We're not hacking the matrix or anything here. So anyway, from our little bottom of the 1 right here to a 2, what happens? We go to the Fibonacci extension 2.618. Exactly. I mean, literally to a T. And obviously the 2.618, lines up again with the 382. So multiple levels of confluence. So then is it possible that when we come up here and we're going to do the exact same thing and we're in fact going to go to the 2.618 again? It's possible. We do know that oftentimes the 3 is the longest, but it's never the shortest. So the 1 is shorter than the 3. So that leaves the 5 could be anything. We could get a super short 1 and we could actually like double bottom or get a higher low and then go back into a bull market. That's fine. We could get a super long 5, which is basically a truncated wave to the downside, which would make it longer than the 3. And it's just like full on capitulation. Maybe we go like super, super low way down here. It's a possibility. The beauty of what we have right now going on is because the 1 is the shortest, the 3 is obviously not going to be the shortest. Therefore, the 5 could do whatever it wants. So when we look now at this extension, we say, okay, it's possible the 1.618 or like somewhere around this is the target. It's possible we get a disgustingly deep retrace all the way down to like $220. That would be the 2.618, which is what we did last time. Now that seems a lot less likely. We don't really have confluence. We have the 786 confluence there. It's not amazing, but it's worth paying attention to. So maybe we'll look at that letter. Or that level. But we know that way before we ever get to that level, we're going to get some kind of reaction from the bots, from the algos, from the traders, from the whales, the market makers. We're going to get some kind of reaction at the 0.5. We know that because it happens all the time. And then after that happens and that all resolves, if we go lower, we're going to get some kind of reaction at 618. So we're just going to have this slinky theory the whole way down where we basically, just bounce and put in lower highs and lower lows. And then eventually we'll look for some form of bottoming pattern, whatever it is. But again, just by mapping this out ahead of time and seeing what's likely to happen based on our experience and based on, the rules-based system of trading and investing that we have, gives us a massive advantage because we don't have to be like, oh my God, we just broke down. What's going to happen next? And go try to figure it out. We don't have to do that because we're already planning ahead for it. That's all we're doing. We're just going to the store, getting the stuff ready to make a cake. And then you're like, oh, it's going to be carrot cake. And I'm like, oh, really? Carrot cake? Like, are you okay? Like, nobody likes carrot cake. I actually do like carrot cake, but my point being, if you get the recipe for a chocolate cake and a vanilla cake, likely, if we decide to bake a cake, there's a high likelihood that's going to be the cake we bake. Now, every once in a while, you're going to be like, oh, we're going to bake an upside down pineapple cake. And it's like, ah, shit, wasn't expecting that. That's all it is. That's all it is. So maybe we don't have the right ingredients, but at least we have the oven and the pan, you know what I mean? The frosting, most ingredients. All right, so anyway, enough of our analogies. We see obviously what's going on with Ethereum. We have some clear targets to the downside. We have clear invalidation levels. Right now on the shorter time frame now, we're actually going to look at this price action on Ethereum. And I want to talk about something different that Ethereum is doing. Obviously, Ethereum has been much stronger than Bitcoin on this little rally to the upside and everything. So let's look at what's going on here because obviously we know Bitcoin has basically broken down from its little channel. But actually, Ethereum is still hanging on for now. Now, depending on how you draw this, technically, when you go to draw one of these patterns, we should be using the bottom point as our starting point and then go from there to the upside, okay? So depending on how you want to do this, maybe you're going to draw it, obviously, to this point if that's all we have, and then you're going to go, up to the top for our next point. So you say, okay, is it going to be this one or is it going to be this one? In real time, we don't really know. So we can kind of see, where do we see confluence? Well, when we move this, when it's right here, it looks okay. There's like some support at the heart line. When we move it up to the top, we see, okay, there's some support at the heart line. So we don't have like a clear indication right now. But as this price action develops, we start to see, the bigger picture, and we say, okay, if we just left it like that, we're missing an awful lot of price action here. So probably that's wrong. So we can start kind of modifying this channel, etc., and see, okay, where does it actually like kind of make sense to? And then when we put it right here, it actually starts making a little more sense. But then like realistically, honestly, depending on how you do it, if you're going to do it exactly, technically, whatever, the key is to kind of encompass the majority of the price action as best that like other people are going to be drawing the same chart. So it doesn't have to be necessarily perfect, but just by lining up these top points right here, maybe we modify this just a little bit. So now we have the touch right here. We have a bunch of touches right here. We have a nice little touch right here. That looks like that top is picture perfect. Okay, so everybody's seeing the same thing we're seeing. And that's, again, how we're able to identify that top on Bitcoin and Ethereum on this move up here. And then when we look at the bottom, we say, okay, it hits the wick right here, but there's a lot of price action outside of it here. So like, actually, should this be down here? Should it be like right here? We don't know perfectly, but when it's right here, we kind of have that heart line touch right there. Kind of have like a heart line touch right here, a little overshoot. So something along those lines. We don't have like a perfect exact bottom to it or whatever, but overall, this is the channel I'm looking at, and it looks pretty reliable. So I like where this is at right now. And now we see Ethereum is still inside that channel. So this Bitcoin capitulation that we saw that dropped down out of the channel, actually Ethereum is still much, much stronger because it's still operating in that range. And you guys know the rules on ranges. The rule on ranges is when we're in a range, we continue to trade that range until we break, because we know if we're in a range, we're going to keep trading in that range until what happens, till we break it. So we're not going to just every time we hit the resistance or support, assume that it's going to break. No, we do the opposite. We'll assume it's going to hold until it doesn't. And if we did it on top here, think about how many times that range held up perfectly. So we're not just going to assume now that we're down at the bottom of the range, it's going to break. Now, it's worth paying attention to because obviously we're doing something different. We're potentially flipping the 200 exponential and simple back bearish. Potentially this trend is getting tired and we are in fact getting ready to break down. So let's just say hypothetically, okay, what are the two, possibilities that happen right now? Well, we're at the bottom of the range. So we know whenever we're at support and we take a buy, it doesn't take us long to figure out if we're wrong. Because here at the bottom of the range, if we break down from here and start closing below that, we start taking out this low and we lose support right here, we know we're probably wrong actually, and we're going to get the measure move to the downside. And we know that actually if this holds right here, likely what's going to happen is we're going to back test the heart line, we're going to back test the 236 again, and then potentially, go all the way up to the top of the range, potentially put in a new higher high. So what does that give us? It gives us 16% upside and 5.8% downside. It gives us about a 3.1 or 3-to-1 risk reward ratio, which is okay. We're cool with that. Technically it's bear trend, shorter time frames. It's, kind of a bull trend. So we can kind of go from there. I'm sorry, I might have said daily, but I meant 4 hour. We're obviously on shorter time frames. I try not to do it as much on stream, but like 90% of you guys or more are members anyway. So you can see like what I'm doing in real time. You don't have to like wait for the next stream. So this is what we're looking at again now. So if this is our first step up here, which is okay, 3-to-1 risk reward ratio, technically counter trend because we're in a downtrend, but on the 4 hour, we're in an uptrend. So you could do that. It's okay. It's, whatever. But really, this is what we're looking for, which is the new high, which just takes us back to the top of the channel, takes us back to that resistance, puts us in the red box area, and gives us 48% upside with 5.8% downside, 8.2 to 1 risk reward ratio. So much, much better. Beautiful. I mean, that's what we want. If we can get 5 to 1 risk reward ratio, that's great. If we can get 8 to 1 or 10 to 1 or 20 to 1, I mean, that's a no-brainer, right? Obviously. Now, is this going to fail? Sure, probably. But we could do this 8 times in a row, and if we're right once, we win. So that's what we're looking for, Looking for those wins, those big W's. So we don't know what's going to happen here. We're trading the range, so we assume we're going to stay in the range. Likely we get a push back up here and a quick little 16% profit. It's possible that we get a push all the way up here and 48% profit. It's possible we shoot up here and we go to new all-time highs. Anything's possible. So now let's look at the downside. Let's say, okay, we do actually break this range. And, as excited as we were just to buy support and sell resistance, it works forever until it doesn't. Eventually we will break. So let's just say this rolls over, hits our stop. We get out of the trade. We lose 5-6%, whatever. That's fine. Where's that going to take us to? Where does the break take us to? Well, back down here to the key support areas, which we know is like the heart line. We know all of the confluence we talked about earlier. That was our breakout of the channel. We would expect that to hold, and that's the majority of the measured move. Now, if it doesn't hold, we would look for the measured move. If that doesn't hold, we look for new lows. And then if we do put in a new low on a daily, weekly, monthly time frame, obviously that looks bad as well. So that's what we're paying attention to. So now we have bullish trade setups to the upside with beautiful risk reward ratios, potential, 16, 50% upside. And what do we have to risk to get that? A measly 5.8%. I mean, are you serious? That's great, right? Of course it is. And we know likely if we break down from this channel, what's going to happen? Well, we're probably going to break down, and then we're probably going to back test. And then, that's really going to be when most people exit, and then we do go for a lower low. So that's what I'm paying attention to. Short to medium term, or actually this is like short to short term on Ethereum. So we'll keep watching that. We do have some, green histograms building. We have a hard buy signal coming out of the bearish control zone. There's definitely a lot of potential in this area for that move back to the upside. But we do have to acknowledge that we're seeing some serious signs of exhaustion in like all these markets, crypto, stocks, etc. So we don't want to get greedy with these moves. And, obviously the longer, the more of these setups we have and the longer this move plays out without confirming back into a bull market, the more likely it is to fail. And if something hasn't moved already, think of that musical chairs example where sure, everybody's still dancing and we're still having fun and we're playing the game. But the longer it goes on for, the higher likelihood we are to get eliminated. So if something's a dog and people are putting money in it later on, after everything else has moved, eventually the worst things move. Like, and a perfect example is, you guys know I like pot stocks, but, of course I'm going to badmouth them because they look like trash. So we know when the pot stocks start moving, and I said it, I think it was on Friday, or it might have been in the group. I can't remember if it was on stream or not. But I said basically, hey, the pot stocks are moving now, so get ready. The rally's probably over. Everything's at resistance, and the worst assets are finally pumping. Rally's probably over. So we locked in gains on a lot of our pot stocks. We locked in gains on China. I'm not sure if I mentioned it specifically on stream again, but I'm out of my China positions. I have no more interest in messing around with China. We had some nice moves. We're seeing weakness. It looks like it's rolling over. It led the market, to the upside, to the downside, back to the upside, and now it's likely looking like it's going to lead us back to the downside again. So we locked in gains on, a bunch of our China positions, and we'll see what happens from there. If we're wrong and they keep going to the upside, sure, I'll re-enter higher. And you say, yeah, but you won't get as many shares this time. If you had $1,000 in now and you have to buy back higher, maybe instead of getting 100 shares, you only get 90. To which I would say, I don't care. I'm not a hoarder. I don't hoard shares. I don't tell my friends, hey guys, look, I have 1,000 Tesla shares. Isn't this amazing? And then you're like, oh, that's super cool. Like, who cares? Unless your bills are in Apple stock or Tesla shares or NEO or in, Dogecoins. I mean, who cares? All my bills are denominated in dollars. Okay. So that's what I use. So that's all I care about. Do I have more or less dollars? I don't care if I have more or less, Bitcoins or Dogecoins or Apple stocks. I don't really care. And that's how, that's how everybody should think. Obviously, none of this financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. So it looks like we're rolling over on Ethereum. We're at support. We have potential trade setups in play. I am long from, basically like this level, give or take a couple percent. And, it could definitely fail, but it could also succeed. In full disclosure, I'm still long on Bitcoin as well. Small positions meant for short-term moves that didn't really play out over the weekend. So I, could be out of those positions at any point in time. So I don't want anybody to be like, oh, he's long, so I'm going long too. Obviously, don't listen to anything I say on stream. It's designed to teach you and show you why I'm taking certain decisions, not to get you to do the same thing. And you guys know, obviously, if you literally listen to anything I say, you will be living in a van down by the river. You know that. I don't even have to tell you that. As a matter of fact, from now on, I'm going to just say, you know what it means. And then you guys say, you'll be living in a van down by the river. You guys know that. All right, so that's it for Ethereum. Nice little deep dive on it, on longer time frames, shorter time frames, what we're looking at, key levels to pay attention to, potential trade setups, etc. All right, so on to Bitcoin dominance. Not a lot changing right here on the Bitcoin dominance. I do keep this one on the weekly. We basically had, I'm not going to walk us through the whole thing right here, but we lost key support right here, this yellow support, and it looks like we're back testing it now. So we know if it keeps acting as resistance and we come down here and retest the bottom of this range, what is that? That's just our point back here, the all-time low in Bitcoin dominance. just connected to our previous low. So if we come down and put in a new low when we get there, obviously this won't be valid. It'll be like, oh, well, that was useless. And that's the problem with only having 2 points. But in the meantime, we would expect at least some kind of temporary support. So we kind of have that right now. We're finding support right here. So what's going to happen with Bitcoin dominance? We don't know for sure. But like when I look at this weekly chart and I say, okay, what can we look for confluence-wise on this Bitcoin dominance chart that tells us, all right, are we like at the bottom and Bitcoin's going to gain dominance going to the future? Or are we at the top and Bitcoin's going to lose dominance going to the future? Well, we could just look at the indicators. Here, obviously, bearish control zone, the hard buy, and then we get a nice little pop, but we go lower. So it doesn't mean the trend's over, but I mean, is Bitcoin dominance tradable bounce from 57 to 73? I would say so. And then again, bearish control zone, hard buy, nice little bounce, come back down, bearish control zone, hard buy, weaker bounce, but then we put in a higher low and then we go to a higher high. So that's nice. And then again here, bearish control zone, very low levels. Are we getting ready for our next bounce? I would say probably. Now, before that happens, do we put in a new low? We don't know. Do we already, come down and put in the low and that's it? And then we're going to go, we don't really know for sure, but we can see all red histograms at the slope line. So we likely get at least a dead cat bounce here. Even if it fails and rolls over, we likely get some kind of bounce here. So it does look like Bitcoin is going to gain strength in comparison to altcoins, which means likely either Bitcoin has like a strong breakout and altcoins don't do anything, not very likely, or Bitcoin is getting ready to gain strength because it's going to go down and altcoins are going to go down a lot more. Seems more likely, but either is obviously a possibility. And then if we go to our total market cap, so what happened on our crypto total market cap? We didn't quite get to our target. So, obviously crypto is, we know that crypto underperformed on this recent move up. When compared to stocks, it underperformed horribly. When most cryptos are compared to something like Ethereum or Matic or Binance Coin, they underperformed drastically. There was only a few cryptos, well, I'd say few. Out of the 20,000 cryptos, probably like what, 5%, maybe 10%, maybe 2% made it all the way back to their daily 200 exponential and simple. The rest didn't even get there, which means they were pathetic and weak. So crypto right now looks very, very pathetic and weak. And again, that's reflected on our, total market cap chart because we didn't even get to the, now obviously we're on the weekly, but we didn't even get up to our 21. And I'm going to switch over to daily. Again, I keep this on the weekly typically, but we're going to switch over to the daily just so I can make my point further. So obviously this is the 200 exponential and simple. And on the total crypto market cap, look how pathetic this move is. I mean, if this doesn't tell you that this asset class is trash and no one wants anything to do with it right now, again, I'm only being mean because the crypto chart looks like complete trash. Okay, it's not because I hate crypto or I don't believe in it. It's because it looks like shit. So if you look like shit and then I'm like, hey, you look like shit today, man, and then you get like butt hurt over it, it's not my fault because you do look like shit. I'm just telling it how it is. And sometimes people can't deal with that. And that's okay. That's fine. If I was in a cult, okay, and I was like, hey, come to my church. It's great. And I was like, I don't know, man. And then you're like, no, seriously, come to my church. It's so much fun. You have a great time. And I'm like, I guess you're my friend and you really like want me to come to your church, so I'll go to church with you. If I go to church with you, okay, and then we get there and it turns out your church is actually a cult, okay, it's okay for you to not like that I call your church a cult, but that doesn't make it any less a cult. That's the most important thing. If your church is a cult and I call your church a cult, you can get mad at me, but it doesn't change the fact that you're in a cult. And, maybe it helps you. Maybe we're not friends like that after, anymore because you're like, oh, if you don't believe the aliens are coming down for us and that if you don't give all your possessions to our church leader, then, you're obviously blaspheming and you're going to go to, the journey to the center of the earth where the lizard monsters live, and you don't get to go to space with us, with the, space alien people that we worship and give all of our stuff to. And I'm like, gee, that sucks, man. Tell me how it goes. I mean, but that's the truth. If you're in a cult, somebody calls it a cult, it's still a cult, whether or not you agree. So regardless, we see this as just drastically underperforming. So we didn't even get up to the 1.25 trillion, which was a target. We fell kind of short, which makes sense because most cryptos look like shit. And now here we are back under $1 trillion again. So we would expect $1 trillion to hold this support. It kind of is. We're at 998 billion, give or take, you know, a couple Michael Saylors or whatever. It is what it is. So maybe we come down here, we put in a higher low, we go higher. We don't know what's going to happen. Hard buy signal. We know it's not very reliable though, because basically, you know, this is the decision point. Okay. So when we look at the Bitcoin chart and we looked at that daily chart earlier and we say, okay, the first time we come down to it, we should find some support, but this is when we're potentially losing the trend. So the signals we get when we're at a pivot, like to either gain or lose the trend, to either resume the bull trend or start a bear trend, those pivot points, the signals we get are kind of like wishy-washy. Here we're in a very strong bull trend, so we know, you know, we don't want to be selling, you know, the hard sells when we leave the bullish control zone. We want to be buying the hard buys. So, you know, the counter trend moves, those are the best ones. And the same thing when we're kind of in the mush area, we don't know what's going to happen. It's kind of like, I don't know, these aren't that reliable. And then if we do confirm into a bear trend, we know obviously from then that we want to be selling when we're in the bullish control zone on the hard sell signals. And then, you know, we want to obviously be, we want to be potentially taking profits when we enter into the bearish control zone, but we would expect bearish continuation. So we don't want to just get out of all our bearish conditions because all of a sudden the bulls have like a moment of control. So again, it's so important to trade with the trend and identify, you know, what is the pivot point. Because whenever we're at one of those key pivot points, that's the likely area that all of a sudden the trend ends. So we would expect this to act as support, but also we know with certainty that, you know, we're very close to actually confirming into a weekly bear market. All right, so that's it for our cryptos today. You know, we basically have a pretty quick little crypto breakdown. What are we at? An hour and 16. Man, the time always flies by so damn quick with these things. Let me take a look over here at the comments, see what's going on, and then we'll keep ripping on through. Paraj says, Crypto Trend Trader, if you have a few minutes at the end, can you cover below tickers? These are some micro cap companies I have been following closely to hit a grand slam in the next few years, like our bet with pot stocks. OCO, EMO. Yeah, I'll take a look at those. If not, if we don't have time today, we'll do them for sure on the next stream. I have a lot of requests for today and then a couple that I tossed in there as well. So we'll see. Maybe I'll skip through some of the basic stuff and we'll just go straight to the requests. Geo Luke, what's up, man? I said, this is great. Crypto trend trader analysis doesn't just apply to markets. It's TA of life, mixed signals, experimentation with the wife, nasty things in paper bags. I mean, I just try to make it entertaining, man, you know, because like we're so like analytical and we're staring at charts all the day. And, you know, it's not always the most social activity, you know, nerding out on charts, trying to get that money. So we just try to have a little fun with it, man. Hex Evolves, what's up, brother? This is the baking channel. That's right, man. We're baking, you know, pineapple, upside down cakes, carrot cakes, all that good stuff. Yep, Crypto Trend Trader analogies are hilarious and amazing at the same time. J-Hoff says, great deep dive. Awesome, man. Glad you enjoyed it. All right, sweet. So what do we got going on here? All right, so let's see. So not a ton happened in the stock market, but I do want to, how do we want to do this? Let's do the stocks real quick, and then we'll just do all the requests in a row. So for TNX, obviously, all right, so this is a big deal. I don't remember if we actually talked about this on Friday, but this is obviously a big deal. Everybody's been calling for yields to go down. We said essentially we're at the point where yields can't go down any further. Everybody's calling for the Fed pivot. Wall yields are going down, and everybody's saying, oh, yeah, this is it. The Fed's pivoting. They can't raise it. It's not true, obviously. It's not, you know, the Fed has been very clear about what they're planning. So we also did some little drawings on here, and let's see how they played out. Okay, so we talked about the potential head and shoulders situation and what that would look like. And then we also talked about the descending channel and then what that would look like. And then if we broke out above the channel, what did we need for confirmation? We needed a close above it, and then an open above it, and another close above it, which we didn't get. We actually just got, shot back down. And then here we gapped up and closed above it, and then we opened above it, and we closed above it again. And then look at that. That was our 821 cross. And just coincidentally, again, I guess other people maybe are doing the exact same thing we're doing. Market makers maybe are doing the same thing, because coincidentally, once we closed and then we opened and we closed again, we confirmed the 821 cross and then we gapped up. So somebody else says, oh, that's it. That's confirmation. And that was the gap up. So again, that's what we're looking for is, oh, okay, obviously other people are doing the same thing. So now we know the measure move basically takes us back to the top of the range. And then if we get back up here to 3.2, we're likely going to retest the top. And then if we get to the top here, we're probably going to, keep going higher. And then we see here the histograms, bunch of green histograms cross the zero, cross the slope line. Slope line is getting ready to turn blue. So that's good. Hard buy signal coming out of the bearish control zone, obviously, has led to a nice move to the upside and breakout of the channel. We're inside the bullish control zone. So now we know that we're in, because people are going to say this I promise you, people will say this. Well, yeah, we're in the bullish control zone for now, but we're overbought. So it's getting ready to roll over. So you're just going to buy the top. Well, is that how it works though? Or are we in a bull trend? Therefore, we disrespect the sells in the bullish control zone because we know, look how many times it told us to sell. Oh, we're in the bullish control zone, sell. And it's like, really though? Nah, still a bull trend. So what do we want to do? We want to buy dips. So here we had a buy a dip opportunity right here. Here we had a buy a dip opportunity right here because the bears are in control. So we have a bull trend and the bears are in control momentarily before the bulls resume control. So again, likely we continue to the upside. Now anything could happen and we know that, but likely we continue to the upside. And then we go to the weekly. What do we see? Well, we see obviously a lot of weeks of just sideways to down action, a bunch of red histograms. We're kind of losing the slope line. It's still blue for now. But what happened in the meantime? Hard sell, left the bullish control zone, came all the way back down to the bottom range, almost to the bearish control zone. And where did price go? Nowhere. So what is this? What's happening right now? A bullish reset. This is a bullish reset. We got way, way, way up into super high levels, almost at 100. I mean, when we look at this, we were up here at what? 96.75 out of 100, okay? If I got grades like that back in school, we probably wouldn't even be sitting here right now, okay? That's good. That's a good grade. So when we get up that high, it tells us, okay, likely we need to cool down a little bit. So what we're paying attention to is when we cool down, do we hold these levels and then get ready for another leg up? Are we refueling before the spaceship takes off? Or is that it and the trend's over and we're just going to melt down from here? Well, obviously, we know we're likely fueling up to take off. And then when we see longer term, well, we were in a bear market since back in 2019, right before the Rona dump. And this is just like so weird, right? March of 2019, we're just randomly right around like March to May, confirming into a bear market. And then we just happen to melt down. And it just so happens to correspond with the Fed cutting rates massively. And it's like, oh my gosh, that's crazy. How did technical analysis possibly predict what the Federal Reserve was going to do? Are they doing technical analysis? Or is this somehow, giving us clues into the future? I don't know. I mean, I guess maybe there's some predictive properties in technical analysis. And that's why, what we do is much stronger than looking at fundamentals or like, praying or whatever it is that all these other idiots are doing. So anyway, we confirmed this 200 exponential above the 200 simple for the first time. So it's the beginning of a bull market. Now it's possible to fail and we get a situation like this. It's always possible. But, likely we've already retested this right here. We already took out this area right here. So likely where are we going? Probably like the next swing, which again is our 2007 level right back here at about like 5.25. So everybody else is calling for lower rates and the Fed to pivot, but we're seeing the opposite. Actually, we're seeing that probably all those people are brain dead morons and they're just like listening to what they say to each other and just begging and hoping and praying because they just hodled and now they're down, anywhere from 20 to 90% on their positions. So they're praying to, God or whatever idol that they have that the markets will turn around and the Fed will pivot and bail them out. But in all actuality, the Fed is saying, hey, we're not going to bail you out. Matter of fact, we're actually going out of our way to destroy wealth. The Fed has literally come out and said, hey, we want to destroy wealth because we got to kill this inflation. And everybody else is saying, no, they're just talking. They're not going to destroy wealth. And the Fed's like, oh no, we're definitely going to destroy wealth. I mean, listen to what Jerome Powell said. He said, we need a reset in the housing market and asset prices. Like, is a reset something good? Like if you're playing video games and your girlfriend's like, hey, I thought we were going to like go out for date night tonight. And you're like, yeah, in a little bit. I'm in the middle of playing my video game. I mean, if your girl or your wife or whatever walks over and resets the console, like, is that a good thing? Are you like, oh, that's great because now I have all my lives back? Or is that a bad thing? For me, when I hear things like reset, I think, uh-oh, that's probably not a good thing. But I mean, what do I know? You know, maybe Jerome Powell's like, no, it's a good reset because you get all your lives back. Okay, sure, maybe. So I don't know. I mean, I think maybe we'll just trust what we're doing here because it's, you know, it's working. So when we look at the big macro here again, and we pay attention to this chart, and it's been a while since I've, you know, zoomed out and pulled this one up here, you know, ignore this little like trash right there. But obviously we've been in this massive downtrend since the peak back in the 1986, which coincidentally, you know, this was when we had inflation last, was this massive run up. And then we had, you know, deflation or decreasing rates constantly, or quantitative easing. And now we're breaking out of this again, starting to put in, you know, higher lows and higher highs. As we have inflation, it tells me, okay, actually, like, probably what's going on right now is probably like the 1960s to like the 1980s. Now, is it going to drag out for a 20-something year period and get up to 20%? I mean, probably not. I mean, but if they make some bad decisions, it could. So essentially, we're breaking out of this 40-year downtrend on rates. And we know what that means. Rates are low. If quantitative easing is in effect, it creates asset bubbles. We know that because that's what's going on right now. So if all of a sudden rates are going to rise, that's going to likely pop those asset bubbles. And it's important too, we haven't talked about this for a while, but the most important thing to remember is while these rates are trending down like this for a long period of time, the longer the rates are low and the closer they are to zero, the more demand that we're pulling forward, okay? We are borrowing the same way when we print money, we borrow the wealth and prosperity of future nations and children and whatever. The same way we're robbing the prosperity from future us and our children and our grandchildren and, you know, the aliens that come and live on the planet, whatever it is, the lizard people in the center there, the same way we're borrowing their prosperity, okay, we're pulling forward demand. So we're stealing from future demand, or, you know, quote unquote, borrowing it in a nice way. So what does that mean? It means in the future, there's going to be less people that do the thing or get the stuff or whatever. So what does that mean? Well, after 40 years of pulling forward demand with unnatural interest rates, I mean, not the whole time it wasn't unnatural, but slowly trending towards zero, and especially what happened over like the last, you know, whatever, 10 years in particular, like 2018 through, or I'm sorry, 2008 through 2022 or whatever, you know, 14 years, arguably since 2000, we pulled forward a ton of demand. And it's the same thing we did during the pandemic. What happened with why are car prices so expensive right now? Why are house prices so expensive right now? Why did they all go up so much? Because we pulled forward demand. Because we basically said, hey, you don't have to pay your bills, okay? And then we gave people money for various things, you know, and then we lowered rates to ridiculously low levels. So basically, you didn't have any money and now you have money. You had a bunch of bills and you didn't have to pay those bills for a while. And then on top of that, you know, we're going to put the rates at basically zero. So it's free to borrow money. So then surprisingly, like completely unexpected, no one could have ever predicted that like all that pulled forward a bunch of demand. So a bunch of people bought cars and drove up car prices. A bunch of people bought houses and drove up house prices and then locked in like ridiculously low rates, like the lowest rates ever. So we pulled forward all that demand. And now in the future, okay, when things normalize and they go back to normal, are we going to have more demand or less demand? Well, we already borrowed a lot of it. So that demand's all gone. So now we need other organic demand to take its place, but not only just regular demand, we need to make up for all the demand that we already used. So what is the likelihood that asset prices are going to continue up in like the short to medium term, like 2, 5, 10 years? It's not very much because we pulled forward all of that demand already. So like if you refinance your house, say you didn't even buy a new house, maybe you did. If you refinance your house or got a new house loan at like 3% for 30 years, and now interest rates are at 6%, and let's just say I'm right, and they break out and the Fed funds rate or, you know, 10-year goes up to like 5%, likely like a mortgage is going to be like 8%. So if you refinanced or bought a house at 3% mortgage, are you likely to sell that house and buy a new house or refinance your mortgage? And you're like, oh, this 3% is too cheap, man. I wish my payments were higher. Like now that it's 8%, I think I'm I'm going to get a more fair rate. So I'll refinance at 8%. Or I think I'll buy another house, this one at 8%, because that's just such a good deal. No, of course not. So now you've created stagnation. Like, part of the problem that we're having right now worldwide, especially in the United States, is M2 velocity is like dead, which means basically the money is not moving within the economy, which is bad. Because the more it moves, the more it gets spent, the more it helps GDP and generates growth and all that. So stagnation is terrible. Obviously, stagflation is, what's going on right now. We have a stagnating economy, and then we are fighting inflation at the same time. So it's like the worst of both worlds. So if we're now locking people in houses or locking people in cars at super low rates, and they're not likely to go get a new car anytime soon because they just got a new car, maybe 2 or 3, and then, they bought a second house or maybe a first house or refinanced or whatever, and they're locked in a super low rate. We pull forward all that demand. Well, those people are going to be stagnant. They're not going to move anytime soon. Not while rates are at 8% or 5% or 6%. No. So what do we do? We're causing more stagnation. We borrowed more money from the future. And then the same way, there's only 2 ways the government pays for anything, okay? And this is the rant of the stream, so you better enjoy it for all you people out there that like rants, because after this, it's just TA, I promise you, maybe. So when you pull forward all that demand, and then the government gives away a bunch of money or spends a bunch of money it doesn't have, aka runs a deficit, how do we pay that off? The government doesn't have any money. They don't have any money. Where does the government get its money from? From taxes? Well, where else does the government get its money from? Because it runs deficits. Well, it borrows it from the future, by essentially, borrowing money from the Federal Reserve and, essentially causing inflation, which realistically is just devaluing the currency, which is basically just tax. So it's just taxes. So the only way the government gets money is taxes. They either take them from you honestly, quote unquote, through legal means, or they just take them from you, when you're not looking, through inflation. But either way, they'll only get their money from tax. That's why we only ever want less government, because all it is just inefficiencies in the market. Free market economy, and private sector is going to do exponentially better with money because they're trying to make profits, as where the government is just like, oh yeah, we don't have to make profits, and we just get this free money every year. Matter of fact, if we try to cut government programs and we don't spend all the money, they're going to say, hey, you didn't even spend all the money we gave you last year, so we're definitely not going to give you more. Matter of fact, we might give you less. So the government's like, oh no, it's the end of the year and we haven't spent all our money yet. Let's go waste it on dumb stuff so that we make sure we get at least what we got last year plus more money to adjust for inflation. And so the more the inflation is, the more money they're going to get. So it's like this horrible avalanche of spending. But it's just tax. It's all tax. And the only way it gets paid for, one way or the other, either legitimately, legally in front of your face, and when I say legally, I mean the government makes the rules, or through inflation. So when we look at this monthly chart right here, this is exactly what we said was going to happen. We're in this bear market since basically the 1980s, below the 200 exponential and simple, in a complete meltdown. Okay? And now here we are. We have broken above the 200 exponential and simple. The 200 exponential is now blue, flipping into a bull trend. Okay, the 200 simple is basically flat. So, I mean, it's probably like days, maybe like weeks away from flipping into a bull trend. So we're going to start our first bull trend in 40 years on yields. Nothing to see here. This isn't an important chart or anything going on here. Nothing to see here, guys. Just another day. The Fed's getting ready to pivot any second now, okay? So if we just hang tight and we just hodl all of our assets, everything's going to be fine. Everything's going to be fine. Or we're getting ready to do something we haven't done in 40 years and people are going to get absolutely wrecked, okay? We'll see. But again, this was our monthly close right here, and we're back at that level again. So if the monthly just closed now, we'd be closing a new high, on the monthly, or same high, whatever. If we get above 3% and we close anywhere above there, we're closing a new high. If we take out this pivot point right here at 3.175 on the monthly, it's game over. Because we know we're shooting up to like 5.26. And what is this going to correspond with? Well, we have about, 10 days left? So we have, obviously, Jackson Hole, the next rate hike coming up next month, only a few weeks away. And at that point in time, that will confirm the Fed funds rate breaking out. the same way that we're getting very close on the monthly. We've already done on the daily and the weekly. But we know once that confirms that at that point in time, you know, we have a series of lower highs and lower lows, and then we have a higher high. So at that point in time, there's no denying that we broke out and we're in a bull trend. So very, very important chart right here. Very important chart. All right, so TLT bond market, obviously bond market gap down right here as we gapped up on TNX. Again, we're getting ready to revisit the lows right here. So all the people, the bond kings out there, they're calling for bonds, and this is a great time to buy bonds. A lot of respected people, people that I respect, a lot of people I respect have been calling for, you know, the next big bond move and everything. I don't see it. I don't see anything on this chart that tells me, hey, we're getting ready. The bond market's just going to rally and things are going to be good. Matter of fact, I see the opposite. So, you know, you can trust them. You can trust me. Don't trust, verify. Figure it out for yourself what you think is going to happen. But very, very likely going to $100 very soon. All right, so obviously we saw that same situation with rates where we basically had a descending channel and then we were talking about the potential breakout. And what do we need to see? A close above it, an open above it, and another close above it. So we haven't done that yet. We're very close here, but we didn't do it yet. So we're very close to a potential oil breakout. That's what we're really watching for. And now we're also getting pinched by the bottom of this descending channel right here in orange and the top of the white descending channel here. So we're basically getting pinched in this little triangle. We're going to break in one direction or the other. Now, we don't know which direction we're going to break in. Obviously, we have potential for upside and, you know, targets and everything. We have potential for downside, you know, and targets and everything. We don't know where we're going to go, but it's worth paying attention to. We think likely if we break to the upside, maybe we go all the way to the top of the range. But we know if we break to the downside, we're talking about potentially hitting like the bottom of this descending broadening, or I'm sorry, of this ascending broadening wedge. So that's what we're looking for. We'll have to see when we get there. We don't really know. You guys know that my macro targets on oil are like high 60s, low to mid 70s. You know, and we're on our way there. Everybody else was calling for new all-time highs at oil. I said, look, we already had the move. It's done. So let's wait, and then later we'll get the all-time highs. All these people are always on the wrong side of the trade because they're always trading what already happened. And that's the difference between us and them. We're trading what's about to happen. They're trading what's already happened. We're not always right because we're trying to predict the future, but by quantifying everything and using position sizing, risk reward, probability of success, etc., you know, by trading with the trend and all of our important, you know, parts of our trading plan, we're able to maximize our success. And then we're always the ones that are waiting in the car. We're already sitting shotgun when everybody else goes to get in. And then, you know, we're driving around for a while and we're like, I think I'm going to call it. Go ahead, drop me off here at the corner. And they're like, really? The party's just getting started. And we're like, no, don't worry about it. And they're like, what about all your luggage in the trunk? And I'm like, oh, just hang on to those bags. I'll get them back from you later. And they're like, okay, man. And then we get out of the car and they keep driving around having fun. And they're like, oh, man, what a sucker. I can't believe he left his bags in here. What an idiot. We're going to the moon. And then like 2 seconds later, they get like head-on collision with the cement truck, you know, and they're all like dying in the car. And we walk up and we're like, oh, I guess I'll just pick those bags back up from you now at like, you know, a fraction of the price. And they're like, oh, man, how'd you know? And we're like, Magic 8 Ball, obviously. So VIX is next. So we're paying attention to key levels on VIX. Obviously not looking particularly amazing right now, but we are finding support at the top of our old descending channel, which is essentially the bottom of our new descending channel. And, you know, obviously we have spent quite a bit of time in the bearish control zone here, getting a hard buy. We're really looking to leave the bearish control zone first to tell us like, okay, like this is it. We're getting ready. Volatility is about to pick up. I suspect that's what happens this week. So next move on VIX up to like 24. After that, like 24.50, something like that. And then likely we end up back here at about like 32%. Now, you know, the VIX is obviously like all or nothing, but that's like a 60-something% move to the upside. So definitely paying attention to that. All right, so let's rip through our traditional assets, and then we're going to skip over like all the like tech big leaders, and we'll go straight to requests. So SPY, obviously at resistance, sell, buy, sell. Looks like we're rolling over. This is obviously our target to the upside. Looks like probably we're topping out, at least temporarily. The key areas to watch are, you know, when we come back down to 200 exponential, we find support. Sell, buy, sell. Again, bearish divergence signal at the top of the range, at the target. Another lower high. Again, looks like we're rolling over. triple Qs, NASDAQ, again, rolling over, hard sell signal. Looks like we are leaving the bullish control zone. Bunch of red histograms, rejected at the 200. Again, we're going to look for the 21 to hold. If we go below like 319, breakdown, and then we're looking, do we put in a new low or, do we put in a higher low? And again, same thing with the Russell at the 200 simple, back testing the 200 exponential. We break down from here. We have the 21. After that, how far do we drop when we break out of this ascending channel or ascending whatever? XLI, same thing on top of the 200 simple for now. Everybody's getting very, very bullish on all of these assets, asset classes, everything, but just not the right time in my opinion. XLB underperforming, rejected the 200 exponential, sell by sell, divergence signal. I mean, like, we're getting clear signs from this market that this move is exhausted. XLF financial, underperformed, backtest 200 exponential. Again, looks very, very toppy. XLC, and again, remember, we're in a downtrend on these now. We're very clearly in a bear market. Below the 200 exponential and simple, bearish slope. So we're clearly in a bear market. So the most important thing in the bear market is we disrespect the bearish control zone and the hard buy signals. We give extra respect to the bullish control zone and the hard sell signals, because we know when the bulls are in control, but it's a bear market, the bulls can only hold control for so long, and then they're going to get, violently disrupted. And that's essentially the idea, that instead of buying the dips like we did on the way up, we're now selling the rips. And the rips are when the bulls are in control for short periods of time. So here the bulls are in control for a short period of time. What does that tell us? Sell the rip into resistance. And that's exactly what we're getting ready to do. AKA doing. I mean, we took profits on a lot of our positions. So XLC communication, absolutely pathetic, underperformer. Basically still kind of trading like in this channel range right here. Just pathetic. Get ready for it to break down. This looks a lot like crypto. Massive underperformer. Didn't even get close to 200 exponential and simple. So if you were like, what's the worst sector in the entire stock market? I'd be like, communication. And you're like, ding, ding, ding. It sucks. XLY, tech. Same thing. Starting to roll over here. XLK. Oh, I'm sorry. XLY, consumer discretionary. XLK, tech, sell by sell, bearish divergence signal, hang on. XTN, transportation, again, starting to roll back over here. Beautiful move back to the back test, but looks like it is headed back to the downside. XLRE, real estate holding up for now on the 200 exponential, sell by sell, not perfectly spaced, but again, looking like basically, hey, we're confirming it's a bear market. We're double checking, is it definitely a bear market? And now we're getting ready to confirm, yep, it's a bear market, headed to new lows. XLP, so consumer staples, reclaiming the 200 exponential and simple, coming back up here, threatening key levels. Obviously, a key level of resistance would be here. After that, it's new all-time highs. Would we expect the safety sectors to look the best right now? 100%. And if I was looking to, make a contribution, or open a new position or something, and I just absolutely had to open a position right now, what would I open it in? I would open it in one of the stronger sectors. I wouldn't be like, oh, I'm going to buy communication because it's, the two-legged horse that's getting ready to go to the glue factory after this. No, I'm not going to buy that and say, well, it's still down though. Well, there's a reason it's still down, because nobody wants it, because it's trash. Obviously. It's obviously trash, or else somebody would have got it by now. You think we're the only ones that like bottom feeding? Like, get out of here. Everybody wants a deal. It's trash. So we buy something that's good, like, consumer staples. Something that's going to do good in a recession or depression. We buy something that's good, like utilities. Like, are people still going to need heat and, electricity and basic services like running water in a recession? No, people stop using that stuff, right? They build outhouses and, go shit outside. No, of course not. They still need all that stuff. So new highs, obviously the strongest sector right now, literally the only one putting in new all-time highs. So utilities, maybe a candidate. Energy, we saw obviously energy was strong all year. Rates were strong all year. DXY was strong all year. And then recently we saw a reversal. All the risk-on assets started going up. All those three categories started going down. And now it looks like those three categories have bottomed again, ready to go back up. So would energy be a good place? Probably. Took out the local high right here. So now we have a bear trend, or downtrend rather. And then we have a low, a high, a higher low, and a higher high. So, could we come back down here again, put in another higher low, and then rip? Could we just off to the races? I mean, we don't know, but seems like a pretty good place to put money to me. XSD, semiconductors. Again, we just use this as an overall gauge of the market. And again, this is just now the initial confirmation into the bear market. And obviously, if this plays out and rolls over, which it looks like it's going to do, likely is going to basically, bearish divergence here, bearish divergence right here, likely tells us, hey, the whole world economy is slowing down substantially because semiconductors are in everything. All right, so there we made it through all of our stonkaroonies and our various sectors. I want to look at two things here, and then we're doing requests. 145. Okay, so DXY, obviously the dollar. I mean, look at this. How many people were just calling for the dollar top? The dollar has already topped. The dollar is done. That's it. Now it goes straight to zero. It's over. The dollar run is over. And anybody that doesn't see it, they're just dumb because fiat currencies are garbage. Okay, sure. So now, how long before all of these people that were just calling for the dollar top right here, and they call for it here, and they call for it here, and they call for it here and here and here, and then we're going to go to 120, and then they're going to say, now the dollar is definitely top. I mean, zero credibility. There's only one person I know that calls tops and bottoms and does it well. Okay? Not going to name any names, but let's just say that he's here right now. And even that guy shouldn't be doing it. It's a bad habit, and he shouldn't be doing it. But he also does pretty good. So anyway, DXY, super strong on the daily. Looks very, very strong. There's still danger. It could double top here or something, but looks pretty damn strong to me. What about the weekly? Does this look like a chart that's topping out? Does this look like the end, or does it look like the 200 exponential just crossed above the 200 simple, and we're getting ready to go in a parabolic uptrend, the short squeeze that will wreck the world? That's what it looks like to me. New high already on the weekly. So anybody that was calling for, the top, well, you're dumb now because we already put in a new high, and, getting ready to continue ripping to the upside. Looks very, very strong on the weekly. What about the monthly? The monthly must look terrible, right? If they're calling for the dollar top. Oh, yeah, that's terrible. It's almost straight up. It's almost going straight up in the air. Yep, it can't get worse than that. The only way it could get worse is if it literally just did anything but what it's doing right now. So does that look like a top, or does it look like we're just headed right back up here to the 2002 levels, about 120? Looks pretty good to me. 200 exponential on top of 200 simple, massively bullish. I mean, I like anybody calling for the dollar that's topping right now. I mean, they're brain dead. Like, I can't even find, the only way this chart could be any better is if it was a blue sky breakout. And we don't know. It might be headed there soon. There's only 2 points of resistance along the whole way. I don't know. Blows my mind that anyone could sit here and say the DXY looks tired or topping out. All right, so it's been a while since we paid homage to Kathy Wouldn't Want to Be Ya. So we're going to take a look at Queen Kathy and the $20 billion blunder that is her investment. So ARKK, does this look toppy to you? Obviously 821 getting ready to roll back over. This is all I heard is the bottom is in because ARK stock is up, 50% off the lows, and that's it. They don't go up 50%. Well, we dispelled all that. It's all garbage, okay? ARK has melted down, okay? How come nobody was talking about how much ARK is still off the lows? Nobody was like, hey, ARK is absolutely terrible. Sure, it's up 50% off the lows, but even to the peak it got to, it was still down 66%. So if I'm like, hey, I'm going to cut off 66% of your limbs, and you're like, no, that's terrible. And then I'm like, you know what? I'm going to give you back actually like 50% of the limbs that I cut off. And you're like, oh, that's much better. I mean, is it though? Or are you still missing limbs? I would say probably like it's still bad because you're missing limbs. You have less limbs than you had before. We're now down 71% off the highs. We were down 78% off the highs. So, another couple percent and we're putting in new lows again. So, is that going to happen this week? Does it happen next week? The week after that? 21%. And we're putting in new lows. So, I mean, I can't promise you that ARK is still complete trash and that Kathy Wood is a brain dead moron. And the only reason anybody invested in her is because she made ridiculously speculative bets on basically Tesla and crypto, Bitcoin, in the middle of like the most aggressive, random melt up bull market of all time. I mean, her track record for like the last 20 years is shit. But she did have that one good run up. But since then, she's lost, like, I think they did the calculations. I can't remember. I saw that. And I think she made investors something like $5 billion. And then she lost investors something like $23 billion or something like that. So she net negative the world $18 billion. So one could argue that Cathie Wood is literally the best woman ever at destroying capital. Now, there is one exception. Elizabeth Holmes did a pretty good job at destroying capital as well. Okay? So it's definitely a toss-up between those two. Now, arguably, I would say Elizabeth Holmes is worse because she did it with malintent. I think Cathie Wood is just a brain-dead moron. So we'll give the cake to Elizabeth Holmes. All right, so we're going to skip all this trash. Not going to look at any of the tech stuff. We know what's going on over there. We've looked at them plenty. We're going to get into our requests. There's a couple member requests in here, as always, and then a couple of assets that I'm pulling up here, and as always, it's very, very important to remember that half the time I don't even know what their members are requesting. Most of the time, it's some horrible garbage stock that's probably going to zero. But regardless, in no way, shape, or form am I endorsing any of these assets, stocks, cryptos, whatever we're looking at. So always remember, it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. What does gold look like? Trash. It's rolling over. What does silver look like? Trash. It's rolling over. What does copper look like? Dr. Copper. Dr. Copper. Dr. Copper. Sorry, that was my Indiana Jones reference. From the low right here in March of 2020 to the high right here, the double top, the you shall not pass line on copper. What happened? We broke down below 236 out of the ascending channel. We came down exactly to the 382. We back tested the 236. So what is likely the next move? As we confirm into a daily bear market, what is likely the next move? I mean, I don't even have to. I know you guys could literally be like, give me the cursor. I'll draw it. Because you already know. You know what the next move is. The next move is the 382. Now, is it always going to do it? No. Is it 100% accuracy? No. But I like my odds. Okay, so likely we're getting ready to put in, another wave down that takes us to the 0.5. In this case, it's COPX, COPX, Copper Miner ETF. But 2151 the target. Now, when we do, or if we do get down to that level, that may be the level we'll start looking for potential bullish divergence, re-entry, etc. Is it going to do it over the next couple of weeks, months, years? If we go into, a recession globally, copper could just get wrecked for a long time. We don't know. But we can presume with a pretty pretty good certainty that likely this is where we're going next. So URA, uranium stocks. I had been bringing up CCJ, Cameco. This time I have brought up URA because I think it gives us a more accurate picture. Cameco is still kind of hanging on to 200 exponential and simple. URA is showing us a little more accurate representation of what's happening in the uranium space. We were talking about this potential like inverted head and shoulders thing going on here. We obviously have some targets to the downside, but what I'm really looking at, let me get rid of this for a second. You balls me. It looks like we're doing something along, these lines, something like that. We have a high, then a lower high. And then, maybe something along, these lines right here, some kind of like little wedge we're kind of pinching into. So we're likely going to come back down here, test the bottom of the range, and then obviously if we, am I really that bad at clicking? I can't even click on a little dot right here. I think my mouse is drunk. We're likely, just going to kind of bounce around in this range. So if we get back down here to the 382 again, maybe we get another bounce. Maybe we start looking at like, a little bit of an acceleration of the downtrend. The parabola, the slope or sell-off is increasing in velocity. So now we don't get anywhere near that top line. Now this is our next resistance. And then maybe we break down from here, come back up. And then next thing, what happens? I guess I'll do like the full like color-coded. God, what is wrong with my mouse? Oh, I was already clicked on it. What is wrong with my brain? All right, so we have like, the kind of downtrend, Then we have the like, oh, it's getting a little bit worse. And then what's next after that? Maybe it accelerates even more. Now we don't know. These are just kind of like slapped on here, but that's what I would be looking at basically. So, but in the meantime, we're kind of just getting pinched in this little tip of the triangle. And then we know, obviously we're looking for accumulation on uranium sometime in the near future. But it's got to get to our levels first. One, because, well, it's probably going to do it. And two, because we're stubborn, obviously. We don't chase the market. The market is our bitch, okay? If we tell the market, hey, get in the car, we're leaving, and the market doesn't come, we don't just chase after the market. No, we start driving away, okay? And then when the market's like, hey, you're not really going to leave me here, are you? Aw. Then we're like, beg, and maybe we'll let you in. And the market's like, please, don't leave me. Then we're like, all right, you can get in the trunk. You don't get the ride up front, though. You lost your privileges. And the market's like, oh, thank God, I'll gladly get in the trunk because I'm your bitch now. And we're like, yeah, I know. Okay? Hypothetically, obviously. Not going to make the market ride in the trunk. Just an example, guys. So lumber, again, rolling over, looking like trash. What is this telling us? Is this a booming economy? Is this like a great world, growth and GDP through the moon and, the Fed's pivoting and all of a sudden, like, things are good? Or is this like a death sentence if we break down from the key support after basically, an Adam and Eve distribution double top pattern? And this is our neckline. And if we break down, lumber goes down to really low levels. It's at 500 right now. 500 is historically low for lumber. We're likely looking at like 300. So is lumber going to be $300? Could go either way, I guess, but there's an awful lot of stuff pointing to the downside. Same thing with wheat. Wheat was supposed to be going to new all-time highs, and it was supposed to just be so expensive, and there was going to be no food for anybody, and all these like narratives and everything. And yet, what happened? Did everything go back to normal? The Ukraine situation's over, and now there's all this wheat. Why are the people that are betting on the futures of wheat all of a sudden not betting on higher prices, betting on lower prices, and confirming into a bear market? We had this massive run-up on wheat. Arguably we had like a little itty-bitty like potential bear market, whatever in here. Why are we getting this massive run-up and then blow off top? Which clearly this is a 100% like blow off top. Why are we getting that? Who's wrong? The people who are putting their money where their mouth is, or the people that are like, oh, you better stock up on rice and water because the end of the world's coming and you better have some security. And I'm not talking about a lock on your door. I'm talking about, lead and gunpowder. Don't listen to these stupid ass people. There's going to be plenty of food because nobody's going to be able to afford it. There can be lots of food. You walk in the grocery store, there'll be food everywhere, but it's going to be locked up, okay? And you're not going to be able to afford any of it because you're going to lose your job. Your house is going to get taken away by the bank. Your car is going to get repoed because you're, an idiot living above their means. Not you guys, obviously, but we're all going to be fine. But everybody else, they're fucked. So Tilray, this one, giving it back. Again, that's why we were saying we got to lock in these profits. Once these pot stocks move, that's it. CGC holding up okay for now. Like an idiot, I still have part of this position open. We will see, though. COP. Okay, so into a couple of requests here. Actually, these are requested by me. So we're going to look at a couple of the big names in energy. So matter of fact, I'm going to grab a drink really quick and take a leak, and then we'll keep going. So give me like 1 minute, and then we will pick back up here. So grab your popcorn, ladies and gentlemen, because it's about to get wild. All right, let's get going. Obviously, none of this financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. So COP, we're going to look at some energy stocks here. ConocoPhillips. So it looks very, very similar to the actual energy chart. We do see the 200 simple has crossed above the 200 exponential. They're still pretty close together. So there is a possibility, if we continue on here long enough, they cross back up and we resume a powerful bull trend. Also worth paying attention to, there's a high probability we still put in a new all-time high and then potentially roll over. Now, we don't know which one's going to happen, but when I look at this chart right here, we see we have the peak at 90, 98, this previous peak, and we're above that already. So if when this comes up, we do not put in a higher high, we're going to have bearish divergence on the daily. So it's worth paying attention to, that there are signs that this actually could be like a fake out or a fail breakout or whatever. But when we look at enough of these, we look at, XLE has a lot of these components we're about to look at. Obviously this is, with the exception of utilities, like the strongest sector in the traditional stock market. So worth paying attention to. XOM next, that is Exxon Mobil. So again, we're looking for the same type of thing here. We don't see that same type of bearish divergence, which is obviously good. We do see, a series of a low, a high, a higher low, and then potentially a higher high, threaten the previous high. We do have a gap right here, so we have to be careful we don't go up to like 100 and then just sell back off a lower high or double top. But again, looking strong. Not a lot of charts that look like this. Next, we have Chevron. So Chevron gapped up here, pushed up, came back down, filled the gap, and now we're just slowly moving up here. So again, we're looking for the same type of thing. Do we see any of that same type of bearish divergence that we need to be careful of? We see here a peak. Here we see a lower peak. So again, there's definitely potential for strength here, but the 200 simple is crossing above the 200 exponential. So even if we do come up here, one of two things is going to happen here. We're either going to put in a lower high and print bearish divergence, or we're going to put in a higher high and invalidate the bearish divergence, but likely the 200 simple is telling us actually the trend is probably already topped out. So while energy stocks still look good now, and I do like energy if I had to pick a sector, we got to be really, really careful with these things. Now, it is possible that we see like, oil producers and, mining and, refiners not do great, but then nat gas still like skyrockets. There's definitely a possibility that we see like some divergences within energy, but it's worth paying attention to. Some of the individuals as well. Next, we see Occidental, OXY. And now from Oxy, we see the opposite. So let me zoom out on this one. I want to take a little bit closer of a look here. I might have just said all-time highs too. And what I meant was cycle highs. Most all of these have put in their all-time highs back in like 2011, 2014 kind of like era. But basically on Occidental, we see we lost the 200 exponential here. 200 simple crossed above right here. The trend, broke down. Obviously confirmed it to a bear market. We're now at the level where we have reclaimed the 200 exponential, and we're likely on the monthly going to reclaim the 200 simple as well. So if we consolidate here after that, then the next thing to pay attention to is we basically have a high, a lower high, a lower high. So do we put in another lower high and then roll over and then confirm back into a bear market for a long period of time? It's definitely possible. It's definitely possible. I mean, this still looks strong for now, but we're at elevated levels. We're at clear resistances. It's definitely the area where it's like make or break. So, right now is if you ask me, well, obviously we were very, very bullish on oil. Here's the truth, guys. I don't even know how to do technical analysis. I just do the opposite of what Kathy Wood does. Okay. If Kathy Wood's like, oil's going to zero, I'm like all in on oil. I mean, obviously not all in, but if Kathy Wood's like, this stock that makes no money is going to go to $1 gazillion by the end of the year, I'm like, I'll literally like the opposite. Okay. That's all you have to do. You don't even need technical analysis. Whatever Kathy Wood research tells you, just do the opposite because she's always wrong. So anyway, we're at key levels now where, a year ago, I could tell you with great certainty that energy was going to go through, go on a nice run. I could tell you 10 years from now, I think energy is in much higher prices. But the next like 6 months to like year or so, I honestly don't know. I don't know what's going to happen with energy because there's a strong fundamental case for it to be bullish. There's also, a decent case that like mid to whatever term that it's not going to be so great. But the technicals aren't telling us much here. It's telling us basically, hey, we're at a key pivot point. We're about to make up our mind. And whatever happens after that is either going to be, a 10, 20, 30-year trend to the upside and just massive bullishness as far as the eye can see, or we're getting ready to roll back over. And then maybe we actually end up bullish not too long after that. But in the meantime, going to be some serious pain. I don't know which one's going to happen. But I could fully see us going down to like $30, losing like 50% of its value, and then going on a massive bull run after that. I could see it just consolidating here, putting in a higher high, and then at new all-time highs before long. So it could go either way. I guess that's my main point on energy is, I like energy, but also we got to be real, real careful. But essentially looking like it's getting ready for new highs here. We'll see this week or so. I mean, if we see weakness in the stock market, I mean, it could get crazy. I have a feeling these next 2 weeks are going to be absolute insanity. All right, so AREC, American Resource Corporation. So let's go to our monthly here. So obviously we have basically, our 2015 peak and then complete meltdown, the race to zero. Didn't quite get there though. Underperformed on the race to zero. It was off by 5 cents. So it almost went to zero, but then it was like, not today. Gapped back up to 50 cents. That seems normal. A 10x gap up. Yeah, that's pretty insane. But obviously, after that, it's basically just been kind of squeezing into this little triangle. It's not like picture perfect by any means, but something along these lines. Looks like. So we're very close to the resistance. Support wise, man, because that like gap down, we don't really have a great support line on the bottom for like just a regular old deal. I mean, that looks okay. Obviously, we found a bunch of support, tried to break out to the upside, and then it failed, and we kind of went sideways here. So it could go either way. Also, I would look at it as sort of like the, descending or the de-acceleration of the parabola. So maybe we're going to do something like this. I mean, we don't have a ton of touch points for reference, but it looks okay. But we're basically squeezing into the range, and whichever direction it decides to break in, it's probably going to be a big one. It's either going to try to go straight back to zero again or break to the upside. And here we see the hard buy signal. Came in pretty late in the trend, but we did see follow through. And here we have the hard buy signal. So, likely this thing, it looks like on the monthly it wants to break to the upside. Now, shorter time frames. On the weekly, backtesting the 200 exponential on simple. Again, a confirmed breakout above resistance will put us above the 200 exponential on simple. So potentially the beginning of a weekly bull trend. Picking up momentum. Yeah, look, the weekly looks okay on this. And then daily basically are potentially confirming into a bull market. Now we had a couple of false alarms right here. This one obviously tried and then broke down. Back tested it, resistance, higher low. Came back up here, retested the previous highs. So what it's likely going to come back down, maybe retest like $2 again, $1.98. After that though, it looks like it probably does want to break out. Now, of course, we're going to just assume that as long as it's inside the range, it's going to keep just chopping around. So realistically, what does it do? It probably does something like this until the last absolute second, or it just immediately breaks out to, we don't know. But I would say the slight bullish bias on this, but now is not the time to enter. Definitely one to keep an eye out on though. That is AREC. WNDR, WonderFi Technologies. So again, let's look at a longer time frame, see what's going on. So on the monthly, looks strong if you stand on your head and, switch the red for the green. It does look good. And it looks the opposite of good. Yeah, this is rough. Here's the thing. Okay. Just to keep it simple. Here we have, obviously a candle, and then we have a new low, and then we have a new low, and then we have a new low, 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 a new low. So all this thing ever does is just put in new lows. So if it just closed right now, it would be a new low. We still have 10 days left in this month. If it doesn't close a new low this month, it's probably worth paying attention to. Now, is it just like, oh, thank God, we're just like not going to put in a new low 1 month before we just go back to putting in new lows? Probably. But it's worth paying attention to that if we don't put in a new low this month, there could be something here. And then we can start looking at the shorter time frames. So, but I would just assume this will continue to put in new lows until it doesn't. Obviously, bears have been in control literally, all year. So it's really got to do something. Now, if we break out of the bearish control zone, get above the 20, we get above the 8, close above the 8, open above the 8, and then close above the 8 again, we'd likely hit the 21. So, that's like a 40% move. But, you jumping the gun on this one. You got it. It's worth paying attention to, but now is definitely not the time. Definitely not the time. Yeah. So we'll pay attention to that one. It's worth noting in the future, but now's not the time on these. And it's not bad to like ask to see an asset, and it's just not the time. I would rather look at it ahead of time and kind of set those levels of when we're like paying attention to it, than come after it afterwards and it's like already up like 400% and like just now confirming bullish. Because then it's like, damn, is it too late now? So next we have Silvergate Capital Corporation, SI. This is the company that owns the MicroStrategy loans and is doing all these like crypto loans. Oh man. So on the monthly here, obviously just went parabolic, been around since 2019 November, so not long. Put in a high, put in a slightly higher high, broke down from support, back testing the 821 as resistance and getting rejected. This does not close back above like 102. This is going to look absolutely terrible. So what does that mean? Did Michael Saylor default on his loan? Silvergate Capital, a fraud? They borrowed money and then loaned it out to a charlatan to buy a speculative asset on leverage that's getting ready to go into like the deepest bear market ever and do something it's never done before. Depends who you ask, I guess. But doesn't look good. Oh, fucking Michael Saylor. What a little bitch. Okay, so weekly Silvergate chart. Trying to confirm back above the 821. Hard buy signal. Bunch of green histograms. Looks okay for now, back testing. If it holds above here, it'll look okay. Gets the 821 cross back to the upside. But look right here, right before the failure. I'd be real careful with this one. I'd be real careful with it. I don't know what here's the thing about a company like this, okay? They're obviously morons if they're loaning. I can't remember what the loan was. It was for like hundreds of millions or like maybe even $1 billion. And they're loaning it to a charlatan to buy Bitcoin with. So they're obviously not making good decisions. So if I'm going to invest in a company, what's one key thing that I want? Good management. So do I want them to be making good decisions? Yeah, definitely. Does Silvergate Capital make good decisions? No, they're obviously fucking morons. Unless Bitcoin literally just goes to like $100,000 tomorrow, in which case I will apologize. I will personally email Michael Saylor and tell him that, all of the comments I made about him being, the crypto slug and Michael the failure and, never seen a billionaire with worse teeth. I will apologize for all of those comments if Bitcoin goes to 100,000. But I like my odds. Looks like it's just getting ready to get wrecked here. Looks like it's getting ready to get wrecked. Hard sell signal, a bunch of red histograms, at resistance, backtesting 200 exponential and simple, confirming into a bear market. Is this thing going to just absolutely melt down? Is Michael Saylor, is Silvergate Capital telling us, hey, Michael Saylor's actually going to default on his loan? Did we break down to the 382? Look at this. From bottom to top, 236, dead cat bounce, lower high, lower low to the 382, back test the 236. Where are we going next? The 0.5. What does that mean? Fundamentally, I don't know. Is Michael Saylor probably going to lose all of their money? Are they going to get liquidated? Did he already get liquidated and we just haven't heard yet? We'll see. Looks like trash. Silvergate going to $42. So I know it's been a hard life out here for a pimp, okay? Silvergate down 60% already. But let's be real. Get ready, because it's about to be down 82% from its all-time high. So I would say bullish. Wait, no, that's not right. 54% downside, get ready. You know, and you guys, I know everybody wants the bullish trade setups, but let's be real here. Let's be real here. It's pretty shitty. Okay, so we can't use the 200 simple as the stop loss because that's just way too high. So maybe we use the 236, 12.5% stop loss. That would also be a breakout of the descending channel. So if that happens, obviously we don't want to be short anyway. But 12% stop loss, 54% downside to the 0.5 and the bottom of the channel. I mean, if we want to trade a range, and that's what I love to do, this is the one. Bear market, back test, the first big trade of the bear market, you know, is the rejection of the reversion to the mean play. 4.3 to 1 risk reward ratio. I mean, it's not amazing, but it's not bad. 54%. But at the same time, too, you know, you don't want to be stuck upside down in this trade or stuck short in this thing at the bottom of the channel. So, you know, we want to be ready to take profits on these shorts quick when we do get down to these levels. But honestly, this is the play to me, is shorting Silvergate. Like, only an idiot would bet against Michael Saylor. Oh, no. That comment didn't age well. FSI, Flexible Solutions International, Inc. All right. Let's get this on the monthly. All right. So we got some history going back to 2000. That is not bad. Basically, let's see what we can kind of put together here. So we got a pretty clear resistance up there at like $5. I mean, we basically have like ascending support, depending if we're going by like the actual, I would say closes probably on the monthly, because this thing is probably not very liquid. Yeah, that looks pretty legit. Looks like somebody else was doing the same thing. So if we go from the close right here, the close right here, it lines up perfectly with that little wick right there. I mean, it literally touches tips. Yeah, so that looks pretty legit. Now, you could argue that this has like a slight slope to the downside. It sort of does, but I don't think anybody cares. It has an ascending support and basically like a horizontal resistance. We're in the middle of the range, above the 200 exponential, or 200 simple, below 200 exponential, basically in the neutral zone right here. Not a lot to see on the monthly. If we go to the weekly, breaking down below 200 exponential and simple, bearish control zone, hard buy signal, a bunch of green histograms. Could go either way. This thing looks like it doesn't know what it wants to do, honestly. It is in a bear market. High, low. Here's a lower high. But realistically, I wouldn't be surprised if it still put in a higher high. So it could go to $3. Looks awfully suspicious, like a descending triangle, though. So we have our flat support bottom. And then as of now, at least for now, you know, we basically have a lower high. So it looks like we're headed back down here. Probably find support around 220. Could you trade it back up to like 259? You probably could. I think that's probably like the short-term play that you would have to be looking for. But I mean, is it? I don't know. I mean, it wicked out of there pretty nasty. 6% wick out. So I mean, you'd have to do it by a close. You would have to play a lower low close with a tight stop, like you know, 2%, 2.5%. And then upside target would be basically just a back test the top of the channel, but another lower high, 16%. So maybe you just don't get greedy and you run this out. I mean, if you run it out to the wick, it's 6%. So it's like only a 2.5 to 1. So I'd rather just have a super tight stop based on closes and then just get stopped out or close my trade, arguably. This is a rough one, though. I don't know. I don't really. It probably does do that. It probably does continue to trade inside this range. And again, if you run a tight stop on this, you could get a nice trade setup out of it. But just be ready for it to fail, maybe even a couple times. Like, don't be surprised if it wicks down here, looks absolutely disgusting. You like close your trade at like a 6% loss, and then it just moves right back up. I don't know. I don't love this one. I don't know what it is either, though. So, HCC Warrior Met Coal. Let's go to a monthly chart. So we have a low, a high, a higher low, and a higher high. This is going back to 2017. So it is in an uptrend. It's very near the all-time high, finding support at key levels. Looks pretty good on the monthly. Now, it does look like it's starting to show a little weakness, like the blue Stoch's rolling over, but it's not uncommon for it to roll over, come back, and then continue to a new all-time high. So I wouldn't get overly bearish on this right now either. Weekly, 200 exponential crossing over 200 simple. Looks pretty juicy on the weekly. Looks like we basically have a, the same way that Bitcoin and a lot of the other stuff has a bear flag. This basically has a bull flag. So, as long as we're kind of in this range right here, we're just trading the range. But if we close outside here, open outside here, close outside here again, so we get a full candle, open and close outside here, which could happen potentially like, in our next week, this thing is going to new all-time highs with high probability of success. Now, it doesn't have to happen, but very, very likely. Hard buy signal at the bottom of the range. Histogram is red, or histograms are green. Slope line is red. It looks like it's going to go up from here. I would look out for potential bearish divergence to develop after the next move to the upside. But likely, let's just say we get the breakout right here. That likely takes us to new all-time highs. And then that likely prints bearish divergence on the TDMACD. Now, it could just rip, though. So let's take a fib from the previous peak. And this would be our, if you're following along at home, that would be our peak from 2019 to our trough from, the peak was April 2019 and the low was April 2020. So about a year apart, almost exactly. The 1.236 is exactly where the measure move would take us to, coincidentally. Isn't that weird? It's almost like someone is painting the tapes. 1.618 would be my likely upside target, $72. It's like 100%, 2x. But I wouldn't get too greedy with it. I mean, initially the target would be like 45, and then I'd look for maybe a little back. I mean, let's be real. If this thing goes blue sky breakout and this is coal company, I mean, it's probably going to be ripping. And again, coal, nat gas, and oil, we may start to see some more like divergences where like maybe nat gas and coal do really good and oil doesn't do great. Maybe nat gas does amazing, coal does okay, and oil does mediocre. Maybe they all just rip to the upside. But anything that is the first stuff that goes into blue sky breakouts going to have all the momentum and no resistance. So that's where I want to be. I'm long in the strongest. So yeah. Now, we don't have as clear of a picture on the daily. So that weekly is like clear cut and beautiful and very, very tradable. On the daily, though, we could easily see a fake out. So I wouldn't just wait and we get another big candle up here and then you get trapped in a situation like this. I would really just wait for the weekly. And at that point in time, maybe you're already at a new all-time high by then. But, I mean, who cares? Because after that, it's like 100% upside. But yeah, there's definitely some potential on this one. But I really do want to see a weekly breakout right here because we're not going to get any clear indication from the daily. It's just going to give us a bunch of mixed signals. And People already got trapped right here. People already got trapped right here. So this thing is fully ready to bend you over and fuck you. And just because you don't turn around does not mean you're not getting it. Okay. So I would wait on the weekly for this, but it does look good. ALCU, Alpha Copper Core. Puh. All right, so let's go to our longer time frames. Take a look. Okay, we don't have a lot of history on this. Just going back to 2019. Basically went sideways. This is like a slight red flag. It's a pretty big wick. Yeah, not getting a lot here. A bunch of red histograms. Hard sell signal below the moving averages on the monthly. Doesn't look good. On the weekly, I mean, it's trying to save the... Trying to move back up. It doesn't look good. Hard buy signal. A bunch of green histograms. It did close at the 21, so that's okay. Look, on the weekly, this got to cross the 821 back to the upside before I could be bullish. And even then, you got to be careful. You know, this is the move you want. This is probably the move you get. And then if we go to the daily, it probably does look okay. Yeah, if it gets like slightly higher, it's going to be back above 200 exponential and simple. Little consolidation. Basically, want to see the 821 on the weekly cross up or get back above the 200 exponential and simple. Does look okay though. But man, anything that has one of these, I'd be real careful with. This is what we call the Widowmaker. Okay? And we don't call it that for fun. Okay? That's the type of shit that literally wipes out your account. So 95% downside in a wick on a daily. So this thing is obviously like completely illiquid. Otherwise, that's just not even possible to happen. So got to be real careful with this. I mean, if I was going to take a position in this, it would be a micro position. I mean, I would like literally like pick up my couch cushions and like gather up the change that I found, and that would be like the size of the position I would take in this. All right, so we had a couple more requests in chat. Jhoff says, wow, TV didn't show me that early price action on AREC until I reloaded. Guess it doesn't change much recently, but I didn't know it went to 5 cents. The race to zero. Almost got there too. Almost. All right, so Paraj has a couple of requests right here. Hey, Paraj, is it the soft G or the hard G? So I'm not always saying it the wrong way. I just like say it both ways. That way half the time I'm right. So let me know. But I would assume it's Paraj. All right, so let me we'll pump up a couple of these charts here. So we have OCO. Oh, you motherfucking mute button. Wow. Oh no. Sorry, dude. Hard G? Okay, sweet. Can anyone hear me? Can you hear me now? Damn, my bad, guys. No audio. Um, yeah, not cool. Audio's been out for too many minutes. We are missing out alpha. Just think of all the analogy goodness we are missing out on right now. Yeah, sorry guys. Okay, I'll just do like the 2-second recap. And then we'll just wrap it up there. So the short on Silvergate. Oh man, I don't even know. It had to be when I did these last three, maybe. Yeah, so realistically, damn, that's my bad, guys. Well, you see what I drew on the chart, obviously. So those were our targets and everything. Basically need to see pullbacks on these things before there's potential. VXTR, there's potential for a move up here, setting the stop loss below the 821 cross with momentum. 56% upside, tight little 7% downside. Yeah, that's probably it. So let me pull up a couple more of these and then we'll wrap it. That's my bad, guys. Sorry about that. All right, so where were we at? Can't even find it. MIND and TPCS. Man, I'm like afraid to mute it now, like ever again. At least I didn't do the whole stream like that. You guys need like a buzzer or something that you can hit. Gets my attention. Oh, what was the last one? TPCS. I need an assistant. Give one of you guys my cell phone so you can text me like, hey, idiot, you're muted. Okay, so let's try again with these last couple. Okay. All right, so ATGN, Altigen Communications. Again, just doing the same thing over and over again. So we have a peak back here in 2000, complete meltdown down to 2014. Lower high on the recent move up with the November 2020 top. So, I mean, at this point in time, this is still in a very powerful downtrend. We have a high, a low, a lower high, a lower low, and another lower high. So, you know, have to just assume this is going to a lower low on the monthly. As far as the weekly, confirming into a bear market on the weekly, yeah, this looks terrible. New all-time lows probably on this thing. Looks absolutely terrible. Bear market. Yeah, this looks really bad. Really bad. I would expect a full-on meltdown in this thing. Now, if we get back above like a $1.31, start paying attention to it again, we start flipping the daily 200 exponential and simple back up. This looks terrible. Yeah. I would stay far, far away from this, from ATGN. Mind Technology Inc. MIND. MIND's nuts. Got him. Got him. All right. So from now on, we know officially 100% that 3 hours is too long for me because I'll just mute the stream and just talk to myself. So we know in future reference. So from high to low, obviously the peak was back here in 97. We got history going back to 95. New all-time lows. High, a low, lower high, lower low. Not good. Monthly, just full-on meltdown. I mean, this is probably going to zero, whatever it is. What is this, like biotech or something like that? Yeah, this is terrible. It's below the all-time low and back testing it. I mean, this thing, whatever this is bankrupt or going bankrupt probably. There's absolutely no way I would ever touch this until it at least gets back above the daily 200 exponential and simple. This is horrible. Absolutely horrible. Yeah. Like definitely the worst asset we've looked at in a long time. That says a lot because we did look at ARK today, so not good. All right, and then TPCS, Public Company Limited. So we got history going back to 2004. We did put in a... No, we didn't. Wow. Double topped, huh? Yeah, basically a perfect double top. Oh, with those big old wicks too. So you know some people are trapped upside down bad in this. Bad. And I'm sure that was after being trapped upside down since 2004. People lit, and then again with these wicks up here in 2016, people were desperate to get out of this. And some people got effed real bad on this. But that is a topping candle on the monthly. That is a shooting star topping candle, double top, after, you know, what amounts to 17, 18 years since it's been at this level. I mean, this is horrible. I mean, this is a great area to probably short from. On the weekly, you know, 200 exponential is above the 200 simple. I mean, but again, that's a tough one. It looks like it's ready to roll over. I mean, it is rolling over. Yeah, if I had a position in this, I would get the hell out. If I didn't have a position in this, I would stay the hell out. If it breaks above that resistance and closes, I mean, it has to close a monthly above there for me to even touch it. Because you would have got psyched out on the daily. You would have got tricked on the weekly. The monthly is the only one that's telling you the truth. So let's say we push up here in the next like 9 days or whatever and close a monthly above 2350. I would long the blue sky breakout. That is literally the only way I would enter a position in this, because likely it's getting ready to get wrecked. Now, again, the monthly, you know, we're above the 200 exponential. We're above the 200 simple. You know, it looks like it should be bullish here. You know, arguably, this is just a gigantic, you know, ascending triangle. We basically have a flat resistance we're banging our head on for like the third time, with ascending support. So it shouldn't be that bad. Actually, this should be like a bullish consolidation pattern. The problem is this could be a bullish pattern and it could be ready to go to all-time highs. But before it does that, it could literally come all the way down here 50%, 37 to 50% down probably. So that's exactly what I would do is I would short resistance or take profits or whatever the situation is now. And if we close, and it has to be a monthly close above 2350, give or take like a couple pennies, then I would get out and then long it. So, you know, again, a pivot point. You either want to be really long here if we close above it or really short here if we don't. But 6.7% stop loss, 50% downside, risk reward ratio. Oh, my bad. I used the wrong tool. Like, man, it's just one of those days. Like, if only they color coded it so you could tell which way the trade setup was supposed to go. Oh, wait, they do. So yeah, something like that. You know, basically like 6 to 8% stop loss, somewhere around there. 50% downside. I personally would just go for, just keep it tight and keep it at like 6%. If it close above that, go long. You know, it's like 8-to-1 risk reward ratio on a short. And then once we get down there, then long it back to the top of the range and just play the range. 115% back to the top of the range, take profits, and then finally if it breaks out to the upside, then long the blue sky breakout. So, all right, so we can go ahead and wrap it up there. Sorry about that mute game, guys. But, you know, it's fun to just, you know, you guys can do like voiceovers on your own and just guess what I was saying. But we will touch back on some of those charts. I think I specifically said a couple of those are worth watching going into the future. But there's just nothing really there for now. So, all right. So when you start doing yeah, sorry about that, man. I'll leave these up here and we'll recap them on our Wednesday stream too. So, but yeah, gonna go ahead and wrap it up there. Everybody have a great night. Right at that 3-hour mark. Yep. Remember, obviously, none of this financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research. Trade responsibly. It is 11 p.m. Eastern Standard Time on August 21st, 2022. And, of course, I am Crypto Trend Trader. And, yeah, let's wrap it up there. I'm getting the heck out of here. Everybody have a great night. See you guys in the group throughout the week. I am still long for now, Ethereum and Bitcoin. But you guys know I don't like to turn winners into losers. So I'm not going to be taking any big drawdowns or anything right now. The markets are looking pretty bearish. Stock markets looking like they're ready to roll over. And that big dump on crypto could be the little premonition of what's to come. So, yeah, risk on, not looking good right now. As long as the dollar's strong, as long as the TNX 10-year is strong, and, we start seeing some more strength out of energy, it just looks like we're going back to the bull trade on those three. And we know that everything else was bearish while those three were bullish. So, everybody have a great night. Remember, none of this financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Crypto trend trader, and I'm out of here. Peace.